Welcome, folks. We'll be getting started in just a few minutes. We're going to be broadcasting the Q1 earnings call from Coinbase and then doing a little discussion afterwards. So sit tight as we wait for the event to start. And let me ping some of the other co-hosts into the room. Oh man, looks like the servers are struggling today on Clubhouse. This is going to be a big one. Let's see what happens. Hey folks, for everyone who is just joining us, we are going to be streaming the audio from the Coinbase Q1 earnings call. We'll be having a moderated discussion afterwards to discuss the implications of what all this means. Please feel free to hit that little plus sign in the bottom right. Invite anyone you know who might be interested in listening in or participating in the discussion afterwards. If you're new to Cafe Bitcoin, click on Cafe Bitcoin at the top left and join the club. We are the most active Bitcoin club on Clubhouse. We have tons and tons of events, and we do lots of one-off events like this one as well. So thank you all for joining us today. we will be getting started, well, as soon as Coinbase gets started. So you can tune in and listen to their lovely classical music in the meantime.
Becky, when is it slated to start? In 10 minutes?
Yes, at 1:30 PST. So we'll be getting started in just about 10 minutes. Maybe we should discuss things beforehand and not just sit here listening to the classical music. Although I do love classical music, so.
I do. It's actually nice. Usually, if you can keep it on in the background, that'd be awesome.
Yeah. So, how's everyone doing today?
Awesome. Excited to hear this call. It'll be really interesting, especially their IPO is, when is it? April 14th?
Yep, I believe so. And it's going to be gangbusters, that's for sure.
Chris, how's it going? Mags, how are you?
Pretty good. How are you? I'm on the way to go pick up my son from school.
Oh, very nice. What does he think of the Coinbase IPO?
He doesn't know anything about that. He has his own bag of Bitcoin, though, so he's going to be happy when he gets old enough to realize what it is. He knows what it is, but he doesn't have any idea what his future is going to hold.
For sure. What's going on, JC? How you doing today?
Hey guys, kind of bad reception. I'm in a pizza place on Hotspot.
Oh, no worries.
Ali Frost is going to be releasing a earnings analysis today. I don't know if anyone else noticed, but I signed up for one of her tweets she had posted. Sign up here if you want to get her analysis. So for those that are here for the call, she might be pretty precise as well on that.
I need to listen to classical music more. So calming.
Yeah. Much better than like voices chattering in your ears for hours and hours a day on Clubhouse.
I've stepped back from Clubhouse a bit. I like coming in for these events and things, but I can't do the constant talking.
Yeah, I don't have the stamina for it anymore either.
Chris, you excited for Bitcoin 2021? We were just discussing some of our plans for Swan Bitcoin for the conference. I think we can't even contain ourselves. That's how excited we are.
Yeah, it'll be my first conference, so I'm definitely excited. I know I missed the meeting a little earlier, but I know we're going to have meetings. It's a while out, but I'm definitely excited. Everyone's in the Telegram group. It's super hyped as well.
Oh, yeah.
How many people are attending?
I think it's around 6,000 at least. I'm not 100% on that, but it's definitely in the 5,000 to 6,000 range, and I think they're trying to expand it. I think it just depends on the city and what they'll allow. But I think somebody said that this will be the largest in-person event since, not the Super Bowl, I don't know, one of the largest in-person events of the year, that's for sure.
Crazy.
Yeah. Come on, Coinbase. What are you waiting for, Brian Armstrong? Let's get this party started. Amanda, will you be buying shares in Coinbase?
I don't know. Actually, yeah, I guess it's crunch time to figure out if I am or not. Would you all consider? I mean, I'll consider it, but I feel like it's going to be too high to get in at a, better than Bitcoin price.
Yeah.
I'm feeling the same way.
I think because look at MicroStrategy, right? I think it tends to be trading at a higher price than Bitcoin, but I know some folks have bought it specifically because it's like an ETF mechanism. And I don't know, have any of you done the analysis on whether it would have been better percentage-wise gains if you had just bought MicroStrategy over Bitcoin because I feel like it might perform better.
No, I haven't done that analysis. I did pretty well on MicroStrategy, but I guess it depends when you bought, right?
Yeah, that's a good point. I think in the recent fall, though, from what I recall, I think it fell much higher than Bitcoin did, percentage-wise.
Potentially, yeah. All right, folks, we've got about 5 minutes left until this is supposed to start. To those of you who are just joining us, welcome. We're going to be streaming the audio from the Coinbase Q1 earnings call. It's happening in 4 minutes now. And then we're going to have a curated discussion afterwards to talk about the implications and what this means for Bitcoin and for the world. Welcome to everyone who's up on stage. We're going to have some more folks joining us later. Should be an interesting call, to say the least. Corey, how are you doing today? Are you with us right now or just listening in?
I'm here. I wonder how long they're going to go. I think they blocked off 90 minutes. I'm not sure how much they actually have to say, and if they're still private, so I'm not sure if they actually let analysts come up and ask questions or what that's going to work like. You have hand raising turned on?
I believe we do. Yeah. Let's see.
Yeah, I don't mind having people pop up. Let's use the wisdom of the crowd and answer some of our questions.
Love it. All right, folks.
I see Jalak, maybe if you want to pop up, you probably know more about this than all of us combined. See if you can join.
Hey guys, I noticed that Square.
Sorry, it's Jalek. I actually have to get on a 15-minute call, so I'm gonna pop back out and then join again in a bit. So
awesome. Look forward to it.
Okay.
Thanks, John.
Okay. Thanks, Corey.
Hey, I have a question for all you very smart people.
Go for it. Although we have 3 minutes left, so let's keep the questions brief for now. We'll definitely have time afterwards for discussion.
Just a real quick question. New to Bitcoin, new to cryptocurrency. Just curious, does cryptocurrency, does it trade 24 hours a day, or is it like the stock market, only in certain hours?
Oh, 24/7, my friend. Never ends.
Okay. Okay. It's not like after hours trading in the stock market or before hours trading.
Oh, no. All the time.
Okay.
So I think, Brecky, once the audio actually starts from the Coinbase earnings call, let's clear the stage from everyone other than the folks that we know closely. Just make sure that there's no interruptions. And then as soon as the call is over, we'll let people back up on stage and do the recap.
Sounds like a plan. We've got 2 minutes left to go. For everyone who is joining us, again, we're going to be streaming the Q1 earnings call from Coinbase. Go ahead and hit that plus sign at the bottom right and invite anyone you know who might want to listen. Should be an interesting call. And for anyone who's new to Cafe Bitcoin, we are the most active Bitcoin club on Clubhouse. We have rooms in all different languages. We do beginner Bitcoin Q&A on Monday evenings. We usually do a lightning room called the Lightning Lab every other Wednesday. We're going to be doing a intro to lightning room alternating on those Wednesdays as well. I'm really excited about that. Why can't I mute somebody right now? Sorry, Pops, I'm moving you to the audience. Don't take it personally, but I can't figure out how to mute you. All right, we have 1 minute left to go.
Hey, just for 1 minute, real quick for Corey. Corey, if I'm on Swan and I want to cancel or pause my plan, will I get my prepaid fees back in the meanwhile?
Guys, let's not have any more questions. Raphael, go ahead and hit swanbitcoin.com/support. This is the venue. Thanks.
Thank you.
All right, folks, I'm going to move some folks down to the audience real quick, right as we're getting ready. We'll bring you back up afterwards for questions.
Welcome to Coinbase's first quarter 2021 estimated results and full year 2021 outlook conference call. My name is Julianne and I will be operating your call. I'll now hand it over to Ebitda, Coinbase's Vice President of Investor Relations, to begin.
Good afternoon, and thank you for joining us on today's conference call to discuss Coinbase's Q1 2021 estimated results and outlook for full year 2021. Joining me on today's call are Brian Armstrong, co-founder and Chief Executive Officer, and Alesia Haas, Chief Financial Officer. Before we get started, I'd like to remind you that during today's call, we may make forward-looking statements. Actual results may vary materially from today's statements. Information concerning our risks, uncertainties, and other factors that could cause results to differ from these forward-looking statements is included in our SEC filings and press release available on our investor relations website at investor.coinbase.com. Our discussion today will include adjusted Ebitda, a non-GAAP financial measure. We believe that non-GAAP measures of financial results provide useful information to management and investors regarding certain financial and business trends relating to our financial condition and results of operations. Non-GAAP financial measures should be considered in addition to, not as a substitute for, or in isolation from, GAAP measures. You can find additional disclosures regarding adjusted Ebitda, including a reconciliation to net income, the comparable GAAP measure, in our press release today and current report on Form 8-K, which are posted on our IR website. Hopefully, many of you have the opportunity to watch the series of videos we published on March 17th, as well as the Reddit Q&A session we published on March 23rd, all of which are available on our IR website. Since we have elected to pursue a direct listing, we will not be taking live questions on this call. Instead, I will be asking Brian and Alesia a series of questions that may be top of mind for many people who are on the call today. And with that, let's get started. Brian, can you start by talking about the Coinbase mission and why you started the company?
Sure, thanks, Anil. So our mission is to increase economic freedom in the world. Economic freedom is something I've long been passionate about, and I talk more about it in the video we recently posted for investors on our IR website. I first realized in 2010 when I read the Bitcoin white paper that this breakthrough technology could create a more fair, free, and open financial system. Coinbase was founded in 2012 to pursue this mission, and today we're the category leader in the rapidly evolving crypto economy. It's helpful to think about this in terms of the internet. The internet was created as a system of decentralized protocols to enable the free transfer of information. Crypto is very similar, but for moving value. By democratizing financial services in the way the internet democratized access to information, crypto will increase economic freedom in the world. When people think of crypto, the first thing that comes to mind is Bitcoin. Bitcoin is critical to the crypto economy, but it's just the beginning. In recent years, we have expanded to be much more than a place to buy and sell Bitcoin. We are innovating and creating new products and services to get more people and institutions into the crypto economy and to help our ecosystem partners and developers grow their offerings.
How should investors think about the total addressable market for Coinbase?
As we look to the future, we see huge market opportunities ahead as more and more people are participating in the crypto economy. In terms of users, we announced 56 million verified users for Q1 of 2021. We often talk about our addressable market as anybody with a smartphone, which is 3.5 billion people today and growing. Coinbase is a safe and secure on-ramp into the crypto economy for people around the world. Another way to think about our opportunity is to look at the total market capitalization of crypto, which is now nearly $2 trillion. Currently, that's 55% Bitcoin. You'll often hear the comparison of Bitcoin to digital gold. But crypto is bigger than just Bitcoin, and Coinbase will ultimately strive to support every legitimate cryptocurrency in the market. In Q1 alone, we added support for 18 new assets, bringing the number of unique assets supported on our platform to 108. For comparison, this is up from over 40 assets at the end of 2019 and 90 assets at the end of 2020. A good comparison for today's stage of the crypto economy might be the dawn of e-commerce in the late 90s. The initial application was powerful, but the amount of innovation over 2+ decades has transformed e-commerce relative to the traditional way goods are bought and sold. We think as innovation continues to rapidly transform and grow the crypto economy, that you'll see crypto power a substantial portion of economic activity over the next decade.
How should investors think about the product roadmap for Coinbase? What do you envision happening over the next several years?
Right, so one of our most important attributes is our track record of repeatable innovation. We want to be at the center of powering the crypto economy. To do that, we need to deliver powerful, simple, and compelling product experiences. Investing was the first and still biggest use case. Crypto investing is bootstrapping a large and growing network of crypto holders, and we are rapidly seeing innovation of new and novel financial services, distributed applications, and more growth on top of this network. We make it possible to use all of these products and services through Coinbase, making it faster, cheaper, and more accessible than the traditional economy, which is largely using infrastructure built decades ago. To that end, we are investing to broaden the type of services people can access through Coinbase. We see a lot of opportunity ahead. For example, on retail, we'll be adding more assets, we'll be increasing our marketing efforts and giving people more access to third-party applications such as DeFi or decentralized finance applications. On institutional, we are investing in our prime brokerage product. And for our ecosystem partners, we recently acquired Bison Trails, which you can think about as us building Amazon Web Services for crypto. This will allow us to offer crypto infrastructure as a service to developers and companies that want to offer crypto to their customers.
Thanks. Can you highlight what you think are Coinbase's key competitive advantages?
Sure. Crypto is very complicated. We've built a lot of different technology solutions to help our platform grow and make it easy to use for our customers. There are 4 key pieces to it. The first is powerful product experiences that make crypto easy to use. The technology is complex, but users need to be able to invest and exchange currency quickly. It needs to just work. And we've done that. We will continue to invest heavily in building the best product experiences and infrastructure to support the growing user base. The second layer is a compliance infrastructure that allows us to operate a regulated financial service business in over 30 countries. We've created software that enables us to verify users, use blockchain analytics to provide transaction monitoring, and coordinate closely with regulators and law enforcement. Third, we've invested heavily in cybersecurity to ensure assets in our platform are safe. Storing crypto safely is complex, and we've created a lot of intellectual property in this area to help guard our customers against loss. And finally, we've built deep integrations across all of the different blockchains. Blockchains are developing rapidly, and Coinbase must always be in sync with these blockchains so that our customers' transactions confirm quickly, and also so developers can easily integrate with our platform and ecosystem. In other words, we run custom nodes for each blockchain on a 24/7 basis to support each of these networks. All of these investments support an underlying and essential goal, trust. Our customers need to have trust in Coinbase, and we think that the $223 billion in assets on our platform, up from $90 billion at the end of 2020, speaks to the success we've had in building that trust. These are the key competitive advantages that we think will differentiate us.
Brian, crypto is becoming more and more mainstream, and lots of other companies are offering some basic functionality. So why do you think more people and institutions are choosing Coinbase?
Right. So first of all, it's great that more companies are starting to integrate crypto. We truly want crypto integrated into every aspect of the financial system. So we'll start with that. Now, while some of these other offerings are offering the most basic functionality to crypto and introducing new people to crypto in the process, some of those customers will also go create a Coinbase account when it comes time to actually do something with their crypto, buy other crypto assets, or do something beyond the most basic functionality. We are 100% focused on crypto, and the feature set and number of assets is expanding rapidly. There will be a long-term differentiation for a company that is 100% focused on crypto, who has solved the hard challenges I mentioned in the previous answer.
Great, thanks, Brian. Let's turn to Alicia for some questions. Alicia, let's dive into the estimated results for Q1 2021 that were included in today's press release. Can you elaborate on these results and explain what's driving the business?
Thanks, Anil. 2021 is off to a strong start. We have seen all-time high crypto asset prices drive elevated levels of user activity and trading volume on our platform. We started the year with Bitcoin at 29,000 and ended Q1 at 59,000, up nearly 100%. We also saw the price of Ethereum more than double in the quarter. We believe we entered into a bull run or a new crypto price cycle in Q4 of 2020. And this price cycle, like all prior price cycles, has drawn new market entrants into the crypto economy and delivered elevated activity. We saw strong growth in essentially every corner of the crypto economy in Q1. Before sharing our estimated results for Q1 2021 included in our press release, I want to note that these results are being provided specifically as part of our direct listing process and are not a format we intend to replicate in future quarters. Let's start with our key business metrics. We currently expect to end Q1 with verified users of 56 million, monthly transacting users, or MTUs, of 6.1 million, assets on platform of 223 billion, which represents 11.3% of crypto asset market share. This includes $122 billion of assets on platform from institutions. And lastly, we had trading volume of 335 billion within the quarter. Turning to our financial performance for the quarter, we generated total revenue of approximately $1.8 billion. Net income between $730 million and $800 million. And adjusted Ebitda of approximately $1.1 billion.
Alicia, you mentioned all-time high crypto asset prices in Q1 of 2021. Can you contextualize for us where we are in the current crypto price cycle?
Yeah, as a reminder, and as we detailed in our perspective, crypto markets have observed 4 major price cycles since 2010, which have typically had durations ranging from 2 to 4 years. On average, these price cycles have increased the overall crypto market capitalization significantly from the prior cycle and attracted new users into the crypto economy. We believe we entered the 4th price cycle in late 2020. We do not know where we are, though, in that current price cycle, but we can already see that we expect to reach a peak materially higher than the last all-time high. Since crypto asset prices and crypto price cycles can be highly volatile, one way we measure our performance is over price cycles. For example, our Q1 2021 MTUs of 6.1 million is approximately 2.3 times higher than our Q1 2018 MTUs of 2.7 million, which was one of the peak quarters in the last price cycle. We believe that we can create long-term value across these price cycles by bringing more people into the crypto economy and serving as the primary crypto financial account for millions of users.
As CFO, how do you forecast revenue and plan for the future?
To state the obvious, our business is difficult to forecast. Our approach to sharing information with you will be consistent with how we operate the business. Due to the inherent unpredictability of our current business, our approach to planning includes assessing and planning for a wide range of outcomes. We forecast multiple revenue scenarios, and we plan for expenses against that range of outcomes. Let's shift and let's talk about our full year 2021 outlook. We may or may not provide a detailed outlook on a go-forward basis due to this inherent unpredictability of our business, but we felt it was important to share a range of possible outcomes given we are a new market entrant. As we have shared with you, our revenue is highly correlated with the price of Bitcoin and crypto asset price volatility. We cannot forecast the price of Bitcoin any better than you can, and as a result, it is very difficult to accurately forecast our revenues. We approach this challenge by running multiple scenarios and examining the associated financial performance. We do not extrapolate the most recent quarter, nor do we think a run rate of a single month or quarter is the right way to forecast our potential financial performance. Our approach is to look at longer-term averages to mute any potential effects of highs or lows. Revenue from our retail users, and specifically retail transaction revenues, are our largest revenue stream today. We forecast our retail revenue as MTUs times average net revenue per user. We are currently running MTU scenarios that help inform our potential average MTUs over the full year 2021 that we shared in the press release today. These scenarios focus on the average MTUs over the full year 2021. To be clear, these are annual averages, or a straight average of all 4 quarters in 2021, including our estimated results for Q1 2021. This means there could be fluctuations on a quarter-to-quarter basis. Starting with the first scenario, our high scenario. This includes the average 2021 MTUs of 7 million. This scenario assumes an increase in crypto market capitalization and moderate to high crypto asset price volatility. In this scenario, we expect MTUs to continue to grow through the remainder of 2021. Our second scenario is a mid scenario, with average 2021 MTUs of 5.5 million. This scenario assumes flat crypto market capitalization and low to moderate crypto asset price volatility. This scenario assumes a modest decline in MTUs from Q1 2021 levels. The third scenario is average MTUs over 2021 of 4 million. This scenario assumes a significant decrease in crypto market capitalization, similar to the decrease observed in 2018, and low levels of crypto asset price volatility thereafter. In this scenario, we assume MTUs will decrease in a corresponding manner and end 2021 at similar levels to Q4 2020.
Thanks, Alicia. You've talked about monthly transacting users, but how should investors think about average net revenue per user, or ARPU, for the remainder of 2021?
Average net revenue per user varies period to period due to fluctuations in crypto asset prices and trading volume. Given this short-term volatility, we focus on annual averages. Over the last 2 years, we have seen average annual net revenue per MTU range between $34 and $45 per month, with the low end of this range occurring in 2019, a period of low Bitcoin price and low crypto asset price volatility, and the high end of the range occurring in 2020, a period of rising Bitcoin price. Given the strong performance of Q1 2021, it is likely that the annual average net revenue per user will exceed this historical range.
Coinbase disclosed that assets on platform are $223 billion in Q1 of 2021, of which $122 billion are institutional. Assets on platform from institutions is up significantly compared to December 31st, 2020. At a high level, what's driving the institutional business?
Our institutional business is still in its early days, but we are pleased with the strong growth we continue to see, with assets on platform growing to $122 billion in Q1 2021 from $45 billion at the end of 2020. We are seeing a wide variety of institutional clients ranging from hedge funds and corporate treasuries to pension funds and insurance companies, many of whom are entering the asset class for the first time. We think our combination of best-in-class custody, advanced execution tools, and deep exchange liquidity are leading institutional clients to choose Coinbase. Looking ahead, we see the opportunity to provide sub-custody and execution as a growth opportunity. These opportunities have longer sales cycles and therefore are hard to predict in terms of precise timing.
Okay, so we've talked about revenue. The other side of the income statement is obviously expenses. At a high level, could you help investors understand how Coinbase will approach expenses, particularly through periods of volatility?
We are in the early stages of development in the crypto economy, and we are investing here at Coinbase for long-term growth. As Brian shared in his founder letter, we seek to roughly break even in terms of profitability over time. This means we may earn a profit during periods of strong crypto asset price when our revenues are high, and we may lose money during crypto winters when revenues are low. For example, the first quarter of 2021 that we just reviewed, we saw high revenue, which led to meaningful amounts of net income and adjusted Ebitda. We clearly did not spend to the level of revenue growth in Q1. Instead, we plan our investments over a longer term, taking historical financial performance and our projected revenue scenarios into consideration. We plan to invest for growth even in periods where crypto prices are low in order to capitalize on the many opportunities we see ahead and make progress on our mission. We use periods of profitability to build our balance sheet, which we then use to continue to fund our business and growth investments if we enter a crypto winter, such as in 2019 when the price of Bitcoin has declined significantly year over year and volatility was low. Over time, for example, over a price cycle, we seek to roughly break even in terms of profitability. We plan our expense investments to drive our product roadmap, geographic expansion, and to build infrastructure capacity to support the next price cycle, which we have learned drives higher volumes and traffic to our platform.
So let's dive into the specific expense line items. Can you elaborate on each line and what the key drivers are?
The primary driver of Coinbase cost structure is people, which drive both our technology and development and our general and administrative expenses. In 2020, personnel-related costs were our largest expense and comprised approximately 50% of our non-transaction expenses. Transaction expenses will vary with revenue and include verification fees, blockchain network fees, fraud losses, and wallet fees. Lastly, our sales and marketing expenses primarily include costs related to consumer acquisition, advertising and marketing programs, and personnel-related expenses that are associated with these functions.
Alicia, can you elaborate on the company's 2021 expense outlook that was provided in today's press release?
To scale our operations and to continue to drive product innovation, we expect our technology and development expenses and our general and administration expenses combined to be between $1.3 billion to $1.6 billion, excluding stock-based compensation in 2021. The majority of this growth will be driven by additional headcount as we continue to scale the business. We plan to augment our historically strong organic growth with customer acquisition and engagement by meaningfully increasing our investment in sales and marketing. We plan for sales and marketing to be between 12% and 15% of net revenue in 2021. In terms of transaction expenses, on average, these have historically been in the low to mid-teens as a percentage of net revenue. We occasionally see transaction expenses outside of this range, driven by a number of factors. For example, higher activity on the blockchain can increase blockchain network fees, or we have months with very low or very high fraud loss events. We currently anticipate transaction expenses will be in the low to mid-teens as a percent of net revenue in 2021. Lastly, in the second quarter of this year, we expect a one-time expense of approximately $35 million related to our direct listing.
Great. Well, thank you both, Brian and Alicia. Are there any closing comments you'd like to share? In closing, we are excited to begin the journey as a public company and appreciate the opportunity to share a view of Q1 and how we're thinking about performance moving forward. Thank you, everyone. Great. Well, thank you, everyone, for joining us today, and we look forward to speaking with you on our next call.
This concludes today's conference call. You may now disconnect.
Short and sweet, eh?
It was so disgusting to me, man.
Yeah. Okay. Before we add commentary, let's just roll back through kind of what we heard. I've taken some notes, and luckily Larry from I forget where he is. He's probably at the block, right? Did a nice little thread. So what we heard was 1.8 billion revenue in Q1. Adjusted Ebitda of 1.1 billion, net income 730 to 800 million. They're up to 56 million verified users now, and that was 43, I think, at the end of Q4, so up 13 million. Monthly transacting users is 6.1 million. That's up more than double from the end of Q4, so crazy growth there. What else? That's kind of the interesting stuff, honestly. I don't know why they didn't bother to say do the math, because anybody can do the math, but I did the math. It was $100 per month per monthly transacting user in Q1. If you take the 1.8 billion and divide by 3, and then divide by the 6.1 million users, that's ballpark what you get. So that's up a lot. Historically, they've been in the $34 to $45 range. So I think that's why they're feeling really good. So yeah, this timing for them going listing on the 14th, on the heels of this, if they also get Bitcoin blowing through 60K, stacking on top of this earnings report, could be pretty bananas. All right, I'm done.
It is interesting how short it was. I feel like they were, just keeping it short and sweet for April 14th. It's better. Less is more on these sometimes.
Yeah, I mean, scripted questions, scripted and read answers from both people. Just definitely bare minimum, don't fuck up was kind of the goal.
Very much like how politicians do it. No, I used to write what politicians would say, but it's interesting. So they're 55% now is from institutional, based on the numbers Larry pointed. You guys remember what the last number, what the percentage was? Because they had a chart recently before this one on institutional versus retail.
No, I don't remember that. I just real quick, I wanted to welcome a few folks up to the stage. We've got some great minds here. Andy Edstrom, welcome, buddy. I feel like you definitely have some thoughts on this. I'd love to hear them.
Oh, thanks, Bricky. Yeah, the thing that caught my attention was, I think, Brian's comment that he's going to manage to, I don't remember if it was zero profit or zero cash flow, but it sounded like, basically going to reinvest everything into the business in the long term. Historically, of course, as we know, exchanges have been far and away the highest cash flowing business model in the whole industry. And I don't know if that's going to change, but I guess watch out for the ambition of Brian Armstrong and crew. It sounds like they intend to reinvest, every dollar of profit that they squeeze out of this beast. And they've already got quite significant market share, obviously, but sounds like they're going to seek to take as much as they possibly can.
Jimmy, what's your take? Tina, you're in the house. Did you listen?
I only caught the tail end of it. Yeah, I only caught a small amount, but I was surprised that they have like 53 million customers or something. That's like one out of 6 every Americans or something.
Yeah, that's KYC users globally. They do have a lot of internationals too, don't forget. But yeah, it's a big number.
It helps to be relatively early in that regard. I don't think we have data, but I'm sure included in those verified users are, 2014, 2015, 2016 vintage accounts. Not that there were that many of them, but probably quite a few 2017 vintage accounts that may or may not be currently active.
I mean, it's literally everyone that hasn't turned their account off and forced them to delete them is in that number, obviously. But I think the monthly transacting users is that's how we think about our business at Swan as well. So I think that's a good metric, and they're at 6.1 at the close of the quarter, which is pretty impressive from 2.8 in December. I mean, that's insane. They more than doubled their monthly transacting users in a quarter for a company that's been around since 2012. We turned hand raising on, by the way, so anybody who wants to come up, share some thoughts. What does this mean for Bitcoin? What's going to happen here? Feel free to raise a hand.
Your comment.
Make sure you mute yourself when you come up.
So I think the earlier question, what did institution represent? And I calculated it at 54%. So whoever asked that question. So there's some whales.
Given the revenue is $100 billion bearish valuation out at Coinbase?
$100 billion is not bearish. This is very bullish for Bitcoin. This is incredibly bullish. It offers a huge area. The fact that you've got a major company coming into the legacy space in terms of the stock market is huge protection for Bitcoin, because you now have an institution that has a big market cap. This is a net massive positive for Bitcoin. There's no two ways about it.
I'm going to go check the price on FTX real quick. I bet you it goes higher than Goldman right now. Goldman's at 112.
I'm just wondering if from those 56 million users, how many of those are institutions?
A tiny percentage would be institutions. Most of those are going to be individuals, obviously. But as far as volumes, they do much higher numbers.
I think they released some data. I think it's around 70% of revenue is from institutions recently. I don't know if that's 100%.
I didn't hear the call, but did they say those are active users? Because so many of those could be dead accounts from like 2013, 2014, 2015.
Something that seemed kind of interesting to me was when they started talking about the almost like the halving cycles and the price of Bitcoin and their revenues across that they almost want to compare, the halving date revenue to the next date and, the peak date to the next peak date, which means they're almost telling Wall Street that they're expecting Bitcoin to, sort of hit these price highs and then these price lows and these higher floors, and they almost expect it to be continually on this sort of cycle. In some of these rooms, people we've been talking about, maybe we won't see that again because of sort of what's happening with the US dollar. But is that sort of what they were telling Wall Street? Is that what you guys sort of took off of that?
What I heard is that because of the cyclical nature of Bitcoin, they will find inferior products to keep their quarterly earnings high. I mean, that's just the impression I got. Did anybody else get that impression? They're going to have to pump other coins to keep their margins good?
I mean, that's what it sounded like to me. Par for the course for Coinbase.
And their business model requires people to trade a lot. And so trying to get them to care about altcoins is sort of endemic to the business model. 486 right now, by the way, and if I'm not mistaken, that contract is you multiply by 250. So yeah, I think that it's 121 billion is what it's trading at on FTX right now. So about 9 billion more than Goldman Sachs market cap.
Another really interesting number, I think, is the assets on the platform. They have $223 billion, and in the report it says that represents over 10%, 11.3% of all of the entire crypto market is held on their platform. I think it's a pretty astonishing amount of assets to be holding.
And amazing that most of it isn't theirs. You'd think they would have more.
Yeah, I'm surprised it's not higher.
Did they name the amount of Bitcoins they hold or just the fiat value?
Not sure, but another number that someone was...
I think it was 150 million they announced a few weeks ago that they had 150 million of Bitcoin, right?
It was something like 4,000 coins, if I remember correctly.
Someone was asking about institutions, and it says that 122 billion of what they're holding is owned by institutions. I believe I'm reading that correctly.
I think one way to look at the market share, quote unquote, if you want to call it, if we want to talk about the crypto market, is Coinbase has over 10% of this market. On the other hand, it's the dominant compliant exchange in the world, and it's only got 11%. And and Bitcoin is so young, and the industry is so young. So it's a reminder that even the largest, most dominant, best branded or best known exchange, on ramp in the world, even that entity only has roughly a 10th, share, which is just a reminder of how no single entity, no single party, even a large company, really can dominate Bitcoin, or the network.
Yeah, decentralization. How much Bitcoin is just lost forever, though?
There's no way to know. There are estimates that, upwards of 1 million coins, but, and if you factor in Satoshi's wallets too, but there's no.
No, there are estimates of like up to like 4 million. That's like the high end estimate. And that's like coins that haven't moved in, I think, more than 5 years. Is something like.
Yeah, I've always heard like 15 to 20%, somewhere in that range. Sure, but that's a significant chunk that adds to the implied valuation of Bitcoin, and that might be deflating the percentage that is on Coinbase.
I'm going to back up Brecky on this one, partly because I'm lazy when I think about the number of Bitcoins. 20 million is the number I use. I assume 1 million are lost Yeah, it would be great if more were lost. I mean, more for the rest of us hodlers, but just to be on the conservative side, I assume that it's 1 million that are gone.
Something to keep in mind when we're talking about total market capitalization of the crypto market is that a lot of that are really frothy valuations for not very liquid crypto assets. So, it's not just Bitcoin you're counting a lot of other things which, are not necessarily as indicative of what's really there in terms of value.
Okay, but other than Ethereum, what other crypto assets have a total market cap that's going to really move the needle? I agree that there are probably a lot of shitcoins that are individually overvalued, but Bitcoin is so big compared to most of these other coins.
Sure, we're talking about 45% of other. So talking about 55% of the market is Bitcoin. So collectively, those things are 45% of whatever else is there.
So I'm reading this report and someone was asking about the 56 million verified users and what exactly does that mean? It's pretty loose what it means. So it's a retail user, an institution, ecosystem partner, blah, blah, blah. They go on and talk a lot and then say that basically you just have to verify an email or a phone number to be considered a verified user. You don't even have to spend money. It's at the very top of the funnel for them. It's not a monthly active user at all. And that even they go as far to say it's verified users may overstate the number of unique customers who have registered an account on our platform, as one customer may register for and use multiple accounts with different email addresses, phone numbers, or username. So that number is probably astronomically way bigger than it really should be. You shouldn't even be reporting that number.
They're trying to generate as much buzz as possible for the IPO. That's pretty much the point of this release.
I'm not sure if the 122 billion, or I should say the 11.3% crypto asset market share is meaningful at all, because all they're doing is the assets on their platform divided by the total market cap of all of crypto. But a more meaningful number would be, this obviously doesn't account for anything that maybe was purchased through Coinbase, but then moved off into a private wallet, off the exchange. So I think we don't have it, but percentage of, market value that was purchased through Coinbase would be more valuable. I guess that 11.3% number could be anything just based on where people are moving their funds.
I think that's a really good point about if you were talking about percentage on ramp, that probably is a huge number, but probably that also gets distorted by when they were, the game in town when all these assets were worth less. Now there are more options. And so that might be misleading in a different way, although it'd be great to have that number.
Agreed.
What do you guys think about the MTUs going forward? They said it was 6.1 million, and their scenario for the rest of the year, the high scenario is 7, which isn't that much higher than where it is today.
What does it do for the valuation of Swan Bitcoin?
Oh, I think it's big for Swan. I think it's huge for Bitcoin. I'm actually surprised by the tone of this room. I've been listening while on a bike ride, and I know, crypto this and crypto that in the call, but man, this is massive for Bitcoin. To have that type of, institutional holdings tells me that institutions are trusting Coinbase with custody. That's kind of a big deal. Everyone should be happy about it, especially Corey.
Oh yeah, this is a great release for sure.
It's a great day for former Microsofties and current Microsofties. I'll appreciate that. But yeah, I think this is good for everybody. This is good for anybody raising this year. This is good for anybody else looking to go public across the board. This is good for Kraken and their private round going on. This is good for BlockFi trying to get out via SPAC later this year. It's good for us and our path. It's good for everybody, really.
Hey, we've got Ben Davenport here. I don't want to put you on the spot, but if you have any thoughts you'd like to share, I'd love to hear them.
Yeah, nothing too specific. I mean, I think the
I echo, VJ just tweeted about this. I was talking to him and he tweeted out just talking about how surprising it is the tiny amount of Bitcoin that they actually hold on the balance sheet. Given, clearly they've collected a lot of Bitcoin in fees over the years. And so, they must have been a net seller. Well, maybe not a completely net seller, but they sold a lot in order to only have about, 4,500 Bitcoin on the balance sheet. They didn't give a Q1 update. That was the December 31st number. But it's interesting, given their, $120 billion valuation, they have, only, a few hundred million of all crypto on the balance sheet. Kind of surprising and disappointing.
Another thing that just came to my mind is the altcoins have really been on a rally over the past couple of weeks. And I wonder what kind of insider buying could have led to a lot of that inflation. And if I'm Coinbase, I feel a lot more bullish about my IPO price if I can say I have double digits, if I have 11%. But it doesn't take too much of a rally in the altcoins to go from having 9.1 or 8.5% of the market to then having 12%, right? Just a small uptick can get you to that. Just a thought that popped in my head, though.
That's a good point.
Bitcoin will be back to 70% dominance within months.
Exactly.
Dominance without volume, accounting for volume, is a very stupid metric in my opinion, because we can start a Clubhouse token with 1 billion tokens right now and add $1 billion to the market cap dominance, right? So we'd only have to sell one of those tokens to add $1 billion to the overall market cap. But if you don't account for volume, it's pretty useless.
And then we can get into a bidding war and take it up to 2 or 3 billion.
I think there's too much emphasis being put on the fact that they don't own a lot of Bitcoin themselves. And I just say that because just as an investor, and like any investor, whether it be a hedge fund, mutual fund, individual investor, they're just allocating capital. And, this year, there will most likely be an ETF where that individual can allocate a percentage of their portfolio to Bitcoin directly. And therefore, if you're investing in Coinbase, you are essentially you'd rather invest in a pure exchange because it's very easy to get a pure Bitcoin play, whether you own, an ETF or you just own Bitcoin directly. So I think I just don't think it matters as much. And again, they're a startup and they're reinvesting all of their capital to grow the business, to be the market share leader and to maintain that position where given their position right now, it is the smartest thing to do. So if that requires them to sell Bitcoin to grow the business before everyone else does, to make sure they ensure they have the highest market share, 5 years out, then I think that's in everyone's best interest.
I mean, it's more like showing where their priorities are and what they believe in. Had they held on to more Bitcoin, they'd be in a much better position than they are now to do exactly what you're talking about.
Yeah, that's right. But they have, compared to basically any company in the universe, the most indirect exposure to Bitcoin. It would be nice if they had more, but that would be doubling down in a way where they have, a ton of exposure already.
Do we have a cash flow statement? I didn't look at December. Is there a cash flow statement in December?
There wasn't in the earnings release. Just
in December, was there a December cash flow statement?
Oh, there should have been with the S1.
I didn't look at it. So if you look at the DNA number of $11 million, that does not imply enormous investment. That's not a big DNA number. So I don't know. I don't know if there's a lot of proof. I need to look at the cash flow statement to see what CapEx looked like. And I haven't looked at it. It's just what I'm looking at. I'm just on that one DNA number. There's not any strong evidence of, massive capital expenditures going into the business.
I got to pop in with breaking news real quick. Hang on. Sorry. Got to break in. Arthur Hayes just turned himself in Hawaii.
Whoa.
Wow.
Man, that makes me sad.
So Arthur Hayes, CEO and founder of BitMEX, has been in Singapore and facing charges for about the last half year or so. I feel like that was about 6 months ago. And just turned himself in.
Hopefully that means that there's been some negotiations going on before he turned himself in. And
Yeah, there is. They planned that quite some time ago. It was part of their offer. They planned. They had made the offer and said it seems like it's a very well negotiated deal. You know, they said if he appears, then he's able to leave again and go back to Singapore, and he can do some of his stuff from there, and then he can come in and he can do some of his other things. He can appear in the New York court from Hawaii by video conference. So at least
So it says appeared before a federal judge in Honolulu pursuant to an earlier agreement, released on $10 million bond pending future court proceedings in New York.
Yeah, it's been at least 3 weeks, if not longer.
Since that negotiated sort of agreement was announced. So this whole
since they announced they were
okay.
He was in Hawaii, and there were articles as long as 3 weeks ago saying that he was making offers to surrender. Whether or not when the deal got done exactly, I'm not sure, but yeah, he's been in Hawaii for at least 3 weeks, if not a little bit longer than that.
Oh wow, that was ballsy. Just chilling out, hoping that nobody came and knocked.
I think there's a lot of places to hide in Hawaii.
Fair enough. Okay, cool. Well, so not news. Let's go back to the main topic. Coinbase it is.
Just to follow up on Tina's comment. So it looks like in terms of the end of year 2020, they spent about 10 million in CapEx first, which was down from 30 million in 2019. And there's actually some capitalized internal use software development costs, which is like another 10 million. But as Tina mentioned, DNA is 31 million and their CapEx was like 10. So they're not spending a whole lot of money.
Against what kind of Ebitda number?
So like last year, Ebitda was 500 million.
Yeah, it's not a big CapEx number.
No, it's tiny.
These guys are not plowing capital into their business.
I mean, it's a percentage of revenue. It's tiny.
They show a ton of Bitcoin on this balance sheet. Where is it going? It's disappearing into somebody's pocket.
Well, they spent like 100 million on Earn.com or something.
100 million on what?
Earn.com. It used to be 21.co. Balaji was his company. Yeah, it got bought, and then Balaji was
That was a couple of years ago, though.
So all right, so I've got their cash flows from operating activities. So it's operating, investing, and financing. In 2019, it was -80, -105, -16 for a combined of -202. But in 2020, they had a
wait. You're mixing things up. What's the CapEx number? You're throwing out numbers without. It's meaningless what you're just throwing out. What's the CapEx number? What page is this on? I'm in the S1. What page is it on?
113.
You're looking at the cash flow statement?
Yes, sir.
Okay, let's go look at the cash flow statement.
It's interesting because they have their business combination, so it was cash flow positive when they were buying companies because the companies themselves had cash on their own balance sheet. So last year, I mean, they were not cash flow negative. I mean, they increased their cash balance from 1.7 billion in 2019 to 4.9 billion.
That's not a cash flow statement. This is notes.
No, it's F8. Let's see what page
F8. What page is that on?
Guys, think about how much 4,500 Bitcoin cost in 2012. That's less than 1 year's engineer salary. So how low do they think of Bitcoin if they only stack 4,500?
What's the best use of that cash at that point in time? It's you're trying to increase grow your business itself versus stacking. And you don't have liquidity. If you're going to stack and hold and never sell, then you need to get additional cash from elsewhere to invest in your business. So,
and it's expensive to run a regulated business in over 30 countries, dealing with lawyers and regulators. Like that's just a huge lift. And then on top of that, in terms of quote unquote innovations or whatever they're doing, I mean, like making it easier for tax reporting and stuff like that, adding features to software. But mostly, I bet they spend a ton on lawyers.
There for a little bit.
He was SegWit 2X.
And they did the
And
stealth
the
launch of
predecessor.
the Bitcoin Cash stuff.
And remember, Andreessen Horowitz owns around 25% of Coinbase, and they've funded a shitload of shitcoins. So it's basically a funnel for them.
Hey, Ellie, I'd love to hear your thoughts. I know you did a write-up of it yesterday, and I don't know if you have additional stuff coming out, but I'd love to hear any more thoughts from you.
Oh, I'm sorry. I'm lurking a little bit on another call, but yeah, I'll be releasing another post-mortem, some thoughts, but obviously very bullish on the results.
Awesome. Looking forward to it.
Meanwhile, word is out that Clubhouse is raising on a $4 billion valuation, up from $1 billion in January.
I don't know. I feel like it was better in January. Like there were more people here and stuff. Do you really feel like it's 4 times more worthwhile right now?
I think it was undervalued at 1. I think that this thing's going to 100 billion by the end of next year.
Android is not out yet either.
Allowing people to get paid also. I think it's going to be interesting. I don't know. We'll see what happens. Wish they'd use Lightning instead of
Why
Stripe.
Why do I get the feeling they're going to issue their own token?
They don't need to, man. It's
Because
all
they're backed
the
by
it's all
A16Z.
Exactly.
Neither does Signal, but they're releasing their own token.
If Snoop Dogg and Teletubbies have their own token, then it's inevitable.
Called Club Clout.
Jason, how are you feeling about your portfolio on the backs of Coinbase hitting 121 billion valuation?
Hey James, can you mute
minutes
yourself?
ago?
Sorry. Thank you.
Yeah, it's exciting. We're also, and I don't know, I probably won't get in trouble. Well, I can just tell you that there's a lot of action for that stock in the private market.
Well, we can all see it on FTX too, because they have the futures there. So it's trading at 121 right now, which is 9 billion more than Goldman Sachs.
Here's the question I have, you guys. So when the banks see this delicious quarterly report, right? And they see the amount of revenue that Coinbase is getting, and they know that they can custody Bitcoin. Do you see them ramping up efforts to get into that game? And if you think about it, like probably all of the 56 million customers that Coinbase has are going to be banking customers, right? Somewhere. So do you see this basically putting a target on their back? And everyone saying, let's go get some of that revenue, so then they'll have like this plethora of competition.
Yeah, it'll be interesting because there's already competition, right? And the thing is, for Coinbase, they're gonna be kind of caught in the middle because you could become shitcoin casino like the Bittrex Poloniex Binance model, or you could go Bitcoin only, which obviously Swan, like Corey is doing, or River Financial, or a bunch of others. If you stay in the middle and try to serve both, you're not going to do both that well, is my guess. And the thing is, like, vast majority of people, they just want Bitcoin. The people that want shitcoin casinos, they want like everything. And
yes,
like it's not a great position to be in. I don't know. They might try to do both or something like that. It seems to me they're going more in the shitcoin casino direction. And if they are, then And basically, they're going to have the stench of altcoin death on them during the bear market, like they just did. So, you know.
I heard Brian Armstrong say on a Clubhouse call with one of the Clubhouse calls recently that they want to be the Amazon of crypto and they don't want to pick winners and losers. That was his statement.
He won't say the word Bitcoins, though. He's such an ass.
They're the AOL of crypto.
I love how they would talk about the blockchain on the call, and we all know which blockchain they were talking about. I think he said Bitcoin once, maybe.
Yeah, that's what bothers me long term, man. Is because I'm saying like the banks literally have the connection directly into the entire flow of money for these people who are going to usually go to Coinbase and buy. And all it takes is for Coinbase to go down during a crazy day or something, and people are like, well, screw that, I'll just buy it from my bank. You know what I'm saying? Like, I think that's, to me, they didn't announce that as a risk, but I think that's one of the biggest risks they have.
That's a great point, Omar.
One way to mitigate that risk is to take $10 billion in debt and just buy Bitcoin with it. Because if a bank wants to buy them out, they would have to, buy into Bitcoin as well.
Can someone go over how much cash they have on hand, and has that grown over the years? Or
Yeah, I'll take a look. One sec.
It looks like they expense their technology. So they're big expense lines. So the question is what the composition of that is.
Looks like cash and equivalents is about 4.8 billion. It's represented by an increase of 3 billion also. They had 1.7 before the print on the S1.
Okay.
Admittedly, this is a little bit of a hobby horse of mine, but isn't another big risk for them that the SEC decides that half or more of the shitcoins on the platform are securities and they have to delist just a huge percentage of their assets?
But that's a good thing because then they get to sell new coins to the public. I mean, that's a good thing for Coinbase's stock, rather.
Yeah, I haven't looked at their latest numbers, but previously I thought like 90+% of their revenue came from Bitcoin and Ethereum trading fees. So even if they did have to delist a bunch of tokens, I don't know how much that would impact their bottom line.
If you look at the daily volume on something like Chainlink, they'll be doing 50 million a day back and forth. So we got a 0.5% taken off of that. I think over a 6-month period of time, in a bull market, that would affect the bottom line for sure.
Plus whatever promotional fees Chainlink is paying them, just like Stellar is probably paying them, right, for this stupid 4% back when you use your credit card or whatever versus 1% if you use Bitcoin.
Yeah, it seems intuitively like this would be really bad for them if the SEC comes down hard on the how we test security stuff. On the other hand, I think them going public is probably the best thing that could ever happen to these altcoins. From both Coinbase can afford lobbyists and they have a little bit more clout as a public company. So very interested to see what happens there.
Yep.
What did someone say their majority of their net revenue is in? Bitcoin and Ethereum, right?
Yeah, but what happens if somebody comes after Ethereum?
No, I hear you. I'm reading it right now. It says the majority of our net revenue is from transactions in Bitcoin and Ethereum.
Lamar, don't get me excited, man.
If anybody
If
ever
I could
understands
jump in.
the origins of Ethereum, it's like, yeah, it's a little bit
Exactly.
ugly.
Yeah.
Oh,
If I
one
could
thing.
jump in
Sorry,
and
go ahead.
talk
Go ahead.
if I could talk a little bit about the right now Coinbase, because it's regulated by the New York DFS, has a process in place for evaluating the coins that it's listing. And if you go to the New York DFS website, you can see the kind of analysis that any of the entities that are regulated there have to undertake to get comfortable with what it is they're putting up on their on their exchange. And one of those items is getting an opinion from counsel that this, what the coin is not a security. Now, I've seen varying degrees of competency exercised in those opinions, but it is an important element they can rely upon. And to the comment that was made about Ethereum a moment ago, or ETH, is that Ether is, the SEC has said that it's not a security as it's being traded now, and that's been the position for 2.5, 3 years now. What they haven't resolved is what about at the time that it was first released into the marketplace?
Hey, Carol, that's
Yes.
often quoted, but it was actually one person at the SEC. It was not any sort of like SEC pronouncement. It was somebody's opinion.
Oh, yeah, but as SEC watchers will tell you, it's about as good as you get from a pronouncement from the SEC, because it came from the division head of, the division that you would look to for that kind of pronouncement. Yes, you're right. I mean, could a court take a different view? Could a new commission take a different view? It's possible. But I think now that the Ripple case is teed up in front of the courts, that's going to really dictate the way a lot of these cases are going to go.
Unless it's in the Federal Register, it doesn't matter what anyone says.
That's not how the Southern District of New York is going to take it. Carol, I agree with you on Ethereum. It seems like this is a pretty good government estoppel claims thing. But my day job used to be to write some of these Howey opinions for issuers, and I can tell you at the time it was incredibly unclear how the courts were going to take it, and I think there's still some real uncertainty, at least until the Ripple case is resolved, for many of the altcoins.
Well, and we're
What about
likely to
ETH 2.0?
some kind of proposal coming out of the SEC in the not too distant future, or from the administration as a whole on a number of these issues. But I guess, being somewhat of a conservative lawyer, I don't think they're going to deviate too far from where their positions are at this point, absent something very significant happening.
It is worth mentioning that Ethereum 2.0 is a totally different structure than Ethereum 1.
It is funny.
Direct control of the protocol.
It is
and
funny
the
how
inflation
terrible the SEC is at doing their job, because literally all of these are securities, and they failed to stop even a single one of them, pretty much.
Yeah.
Carol, what about what's so funny? If we stay on the topic of Coinbase, if the XRP situation comes down on the side of XRP, Coinbase becomes way more valuable, right? Because then what'll happen is you'll wind up seeing a lot more coins, a lot more ability for trading, which gives them far more revenue, right? So I think this XRP case has a lot to do with Coinbase as well.
I agree with that, but I think it's asymmetric. I think if Ripple loses its case, that's really bad for altcoins. But compared to most altcoins, Ripple has pretty smart lawyers associated with it. They've got a legit board. They've got a high market cap. I don't think that if Ripple skates, that means that all other altcoins are likely to skate.
Also, to follow up on what Lamar said, Hester Pierce has been pushing a safe harbor framework for those tokens for about 2.5 years now. And if they decide to adopt something like that, I think it would be equally as bullish for Coinbase.
I did an article back in February of 2020 for CoinDesk, and personally, I've never thought that Hester Pearson's proposal had much. Had too many legs on it, whatever you want to say, that it was going to go anyplace. And I think that's even more the case now that Gensler's in place. I think we may see some new thoughts on approaches, but I wouldn't see it moving the needle too much from where we are. And I personally, I hear Lamar, I respect his views, but I'm not sure that as goes Ripple, goes Coinbase. I wouldn't tie the two together at all.
Carol, why do you say that about Gensler? Now you said that now that Gensler is in place, I thought he was probably going to be much more friendly to crypto and Bitcoin than Jay Clayton.
I don't know why you think that might be the case. I mean, he is knowledgeable about the technology. Does that knowledge mean that he's going to relax the federal securities laws in favor of crypto and potentially further exposure to people that the securities laws were intended to protect. And I'm saying that as devil's advocate in part here. I think if you go and you listen to what he had to say when he testified before Congress on the Libra hearings back in, was it June or July of 2019, I think that he's going to have he has a knowledgeable view, but I think it's going to be a fairly conservative view of how the regulatory structure should work around it. Now, I want to be very careful. I don't want that to be interpreted, oh, they're going to go regulate Bitcoin, they're going to go regulate, different types of crypto. It's the sale and the distribution. And the Ripple case, at the end of the day, when you read through it, the real argument was that the SEC's argument is that Ripple was being used by the people who were involved in creating it in the first place in the way that you would use a security to help fund the further development of the business. And that's what's really at issue in that case. So I know there's a lot of confusing elements here. Do we need to have some sort of a structure that allows especially what we would consider, for lack of a better term, a utility token, to be able to be used in a way that is more utilitarian than it is necessarily a security or a currency? Yes, that's possible, and that's hopefully where we'll see some leadership.
Carol, this is Jason. I do think there is something to be said about Gensler's approach that might be a little different. He has signaled in the past, talked about that he believes Ripple or XRP is a security. He's also said he's considered whether Ethereum is a security too. The CFTC's has commented that, to Tina's point, when they convert to a staking mechanism, that they might have to be reevaluated as to whether they are a security. I appreciate your confidence, and I know you're doing the devil's advocate thing, but I'm hopeful about Gary Gensler in terms of some of his perceptions of the market, and to have someone who is a professor at MIT, I think is going to offer a lot. I'm happy to also announce too, and I mentioned this to Corey, and it is confirmed, we do have Hester Pierce coming to speak to Cafe Bitcoin on May 21st about Bitcoin ETFs and all this, so we'll get a chance to ask her direct questions.
So I'll make a couple of comments here. People were asking about the revenue for Coinbase, and I'm on a chart right now, F25 and the S1, and it shows 2019 versus 2020, and I think this is endemic of why, or indicative of why Coinbase is doing a direct listing as opposed to an IPO, a priced round. Just take a look at RetailNet. So net revenue, transaction revenue, retail in 2019, they posted 433 million-ish of revenue. In 2020, 1.04 billion. For institutional, 30 million of revenue in 19. In 2020, 56 million. So not a huge growth number there, but the retail side has grown significantly. And so when you take a look at they've got subscription services, everything else, those are probably in the, single digit millions up to, a max of 20 million for 2020. But those are all significant growth rates from the prior year. So I think this thing is a slingshot pointed at the moon as far as where their perspective is, and certainly gives me further conviction as to why they're doing a direct listing as opposed to the traditional marketing for an IPO.
It's funny, the only thing I heard from that was all the retail people coming in getting wrecked. Look at all the retail people, the millions of retail that are coming in buying DeFi tokens, thinking this is just the same asset class as Bitcoin.
Listen, if you buy something called sushi coin or hot dog coin or whatever, and you get wrecked, that's on you. Sorry.
Is there any concern though that
got a long on sushi coin?
The inevitable dip of or crash of the future Coinbase security due to prolonged bear market, especially if you see like in 2018 with 99% drawdowns on most of the alternative assets, kind of playing as a narrative for against Bitcoin as well, because Coinbase is kind of seen as part of it.
And I think that ties into why they're doing this IPO right now. If you look on page 112, it says since our customer custodial funds are included in cash and cash equivalents, and last year it was, under $1 billion, and this year it's well, from operating activities they had $3 million in cash flows, and they're keeping customer custodial funds included in their cash and cash equivalents. So just take that for what it's worth.
Well, personally, I'm also just concerned about how it's used as a narrative against in the market, almost as like more FUD.
Yeah, especially with the new, like this bubble is even worse. It's like you got a lot of reputational, like highly respected people in the macro world or whatever are just pushing the narrative that Bitcoin and crypto and Ethereum and Bitcoin and DeFi and Bitcoin. So it's even worse this time. Like last time, at least it was ICOs were blatantly, obviously dumb startups that couldn't get money from VCs, and there was just a FOMO bubble. But now a lot of smart people are coming in and just kind of swallowing this narrative that, well, I guess the future of finance is going to be on a blockchain. So yeah, you're right, man. When this blows up, I think this time it's going to affect people's perception of Bitcoin.
Once again, if you listen to Banana Boy Mark Cuban and you think he's intelligent and you invest based on his advice, that's on you.
Yeah, the second part of that sentence I was reading said, any large fluctuations in the related liability will directly impact our cash flow from operating activities. We believe our existing cash and cash equivalents will be sufficient to meet our working capital and capital expenditures needs for the next 12 months. So any kind of blow off top, any kind of drop in the altcoins is really, really damaging for Coinbase.
So is it going to be net negative or net positive? What do we think? If this thing goes out and it's the IPO of the year,
I mean,
they're a shitcoin casino.
If they're $9 billion over Goldman right now, they could, this could be like Tesla or Apple, like bordering that, but I don't see it sustaining that.
I think it's net positive.
Yeah. I hope. Yeah. Good for Bitcoin in the end?
Yeah, definitely a net positive. Definitely.
Everything's good for Bitcoin, Brad.
I hope their employees bigger believers in Bitcoin than the CEO, because
they're
going to mint thousands of millionaires, or at least 1,000 millionaires. So hopefully they invest in Bitcoin startups and buy more Bitcoin.
I'm also excited to see guys like Morgan Stanley or Goldman eat their lunch, because fuck Coinbase.
The problem
there's at least a few Bitcoin maximalists on Coinbase.
This is going to be another wind of like another injection of cash into all these crypto DeFi protocol things. Because there's a lot of these VCs that are going to have Coinbase stock now that, it's going to prolong the bubble, I think. The crypto bubble.
If they were smart, they'd go buy Bitcoin with it.
So they closed 1.3 trillion in trading volume for the year. Did they disclose how much of that is Bitcoin? Because that's essentially the entire market cap of Bitcoin turning over every year. Obviously, it's not happening.
Coinbase's entire
70-60%.
Their entire business is Bitcoin, because every single shitcoin they sell is a Bitcoin derivative.
Yeah, 1.3 trillion.
Yeah, but even just volume. Directly, I'm pretty sure most significant majority of their volume is Bitcoin. That's what I seem to hear from OTC desks and people that are watching on-chain volume and everything. It's significantly all Bitcoin. Be nice if they reported that, though. If they said, this is how much of it was Bitcoin, this is how much of it was Ethereum, and this is how much of it was the rest of it.
I think that's on CoinMarketCap, actually. I think you can see it by exchange and then actually see the pairs and see what's trading on different exchanges. Been a while since I looked. Tim, I don't think you got a chance to speak, but go ahead.
Yeah, I was going to just say that, people are talking about, what the potential performance of Coinbase will be, or at least the equity when it's released. And as I take a look at it, as a, if I put my analyst hat on, I say that there's clearly concentration risk in the operating model, because they custody, cryptocurrencies. They earn a fee off of the trading of that from institutional and retail customers, but that's their only business. So they get custodial fees, et cetera. So there are other things that break down the revenue. But if you take a look at other market incumbents, so to speak, like Morgan Stanley, BNY Mellon, they're all making moves, Fidelity, they're all making moves to kind of turn into their lane. They're a lot more diversified in terms of their businesses. So if Bitcoin takes a dump, or if cryptos in general take a dump, their businesses are not going to be as affected nearly as bad as Coinbase. So you've got some significant concentration risk in Bitcoin or in Coinbase. And that's something that they're probably going to be thinking about diversifying away. They have a fiduciary responsibility once they become a public company to protect shareholder value. So that's one thing I'd be looking at.
Has
So real
anyone
quick on-
considered the value of the customer base? It's a very large customer base, and if you look at traditional FIs, some of them, at least some of the models, have historically bought others because of the customer bases that they have. So I don't know if that's figured into anyone's calculation.
I think the
government.
The government's going to be a big customer because they have a surveillance company they bought last year, and they already have a government.
The other thing I'd like to point out is they have a lot of accounts that are just people who signed up with their email address, maybe gave some information, and they count that as accounts or users, but they're not customers in the sense that there's no money in those accounts. They have a lot of those, which I think all the exchanges have. They all have that to juice up their numbers. But yeah, what really matters is how much is being transacted, and the power.
Objection!
Really. Okay.
Just envision the discussions going on in C-suites across bank/investment banks across Wall Street, looking at the market cap of Coinbase. These are not happy people. They are just not happy people looking at that. Trust me, they're not.
So they're
numbers there. It would be about
$1,600 per customer.
It's about $2,100. If you look at $120 billion valuation right now on the FTX futures market for the IPO, and then 56 mil or whatever, that's like $2,100 per KYC user. As far as transacting users, they're at 6 million, so that's about $20,000 per user. So obviously there's a ridiculous amount of growth sort of priced into where the market is seeing it right now. Also just took a look at last 24 hours volume on Coinbase, and it's 19% Bitcoin to USD, 13% ETH USD, 6% Litecoin, 6% Stellar, 4% Link, 4% Cardano. So basically, and then there's like 2% Bitcoin to Euro. So I'd say, like, if you add up all the Bitcoin to different fiats around the world, you probably get to around like 22% or something like that. Would be my guess. Did anybody spot who's doing the objection thing? Because we should.
Yeah,
check
it's
the
this guy, I
audience.
think Ninon or something.
Who is it?
Maybe Ninon. Can anyone else confirm that?
I thought it was Sam. At the
Sam.
very bottom.
There's also a Spencer down here with his mic on.
Yeah, hey,
Yeah,
guys.
this is Elliot. I've got a question to you guys
you guys
because
hear
I'm
me?
listening.
Sorry, this is Spencer. Can you guys hear me?
Yeah, we
Okay,
can hear you.
cool. Yeah, this is my first ever comment in Clubhouse, so go easy on me. My main observation on the S1 and the IPO. I used to cover IPOs and a lot when I was a journalist at Business Week and the Wall Street Journal. I covered the Facebook IPO, the Google IPO. The thing that really jumps out at me is $100 billion or $100+ billion valuation is incredibly rare for an IPO. And Facebook, I think the last company that had $100 billion valuation on the IPO, and the profitability of the company is just spectacular. It's very rare that you see a company going public with multiple $1 billion of profit and margins at the level that they see. So it's incredibly impressive. But the thing I wonder, as putting on my former journalist hat, is, Facebook had incredible network effects, which gave them really high barriers to entry. And what I wonder about Coinbase is all those other Wall Street people that guy was talking about who are not happy about this. They're going to be coming after these guys like hardcore. They already are. And I wonder, like, what people think about how big is the moat that Coinbase is building around its business?
Zero.
How sustainable is it?
It's
They
zero.
don't have. They
There
don't.
is no moat.
They don't have a moat.
There is no moat.
Yeah, this is not the right.
It's
time to
actually.
ask that.
It's actually really good to see their business carved and sliced up by others. It's a huge positive for Bitcoin. You want to see the business carved up and sliced up by other companies. That's good for Bitcoin.
Right.
Their
From the
moat
point of
would
view of like
say
an
is-
investor who's thinking about buying or not buying the Coinbase stock, what I'm hearing from you guys is don't buy it.
What they're trying to say is their moat is their
Coinbase stock.
custody for the institution. So yes, you may have Morgan Stanley or Goldman Sachs have the crypto, but they're probably not going to custody it. So they're trying to say they give a full all-in-one solution on custody, and they can point to Tesla, they can point to MicroStrategy. Whether or not that's as big of a moat as they would say it would be, probably not.
They also have incredible.
Look,
they also
let's-
have an incredible goodwill in their name, right? Like just from the standpoint of that's what people know their name. Like if you ask any person on the street about where they'll buy Bitcoin, they're gonna say Coinbase. I'm telling you, we see it every day. So I mean, they got that piece from that perspective. But other than that, man, like their business is not that difficult to actually replicate.
So
I don't even know
just
about
like-
that. I think
liquidity begets liquidity on exchanges as well. You see this in financial markets. Like whoever has liquidity, this is why people are always like paying market makers to support their stocks. And this is how things work. You can't just start an exchange that has like slightly better technology and unseat NASDAQ and NYSE. Like you would have to work for many years to like flip in a major exchange. It's the same thing with Coinbase. People are used to going to Coinbase because they have deep liquidity compared to what else is out there. That's going to persist for a long time alongside the brand equity that they've built up since 2012, as Lamar said.
Something that I haven't heard said yet is that I think this is going to shine a very bright light on tax treatment for cryptos. Because I mean, Bitcoiners basically buy and hold, but altcoiners for the most part trade a lot, and they're going to be releasing quarterly numbers about the trading activity. And it's not going to take a resident genius at the IRS to figure out there's a lot of underreporting in trading activity when it comes to doing taxes. So it'll be interesting to see how that develops.
Oh yeah, 100%. I mean, I think when the person asks, is this a net positive for Bitcoin? I would say absolutely yes. But I would say the flip side of that is with greater power and visibility comes greater responsibility. So this is going to trigger a whole nother new level of scrutiny of this space that you're not going to believe. It's going to get.
Are there any? I have a quick question, if I wouldn't mind, if anyone would
Go
mind.
for it.
Are there any potential downside risks to the overall, let's say, like Bitcoin price if Coinbase gets overvalued? So we were just talking about how, in regards to their moat, like I feel like people who don't typically, dip their toes into the Bitcoin or, crypto ocean think that Coinbase is going to be the Facebook, and that
No, I don't think the price of Coinbase is going to drive the price of Bitcoin. But I do think with what Spencer's talking about, with additional scrutiny coming out of this, that ties directly in with what their moat is. And I think you saw the news article today with the trade association they're starting with Fidelity and with Square. I think that whenever you're a company that's of this size, your only economy of scale is to create barriers to entry to the smaller competitors in the marketplace. So I think that they're actually going to fight for a little bit more excessive regulation on the smaller people. So that's something for us to think about too. Like, what kind of innovation is going to be blocked because Coinbase needs to protect its market share?
It's the opposite way around too. Coinbase is sucked into Bitcoin's gravity, not the opposite.
I want to piggyback. This is Alex. I want to piggyback on Patrick's comment too, because that was my thought initially. Is that with all the different variables in the marketplace, with exposure to CMEs and ETFs, all having correlation to Bitcoin's price, with the CMEs trying to close the gaps at the end, and I just felt like with Coinbase, as big as it is, and people consider it the holy grail with an investment into Bitcoin. I know there's the Geminis of the world, but really Coinbase is the US exchange of choice. So, I mean, my thought really is that any kind of bad press outside of a huge hack like Mt. Gox, I I do think there could be some correlation negatively against Bitcoin, but that's just my opinion.
That's incorrect.
That's wrong. You don't know what you're talking about.
I disagree because they don't even hold enough Bitcoin to matter. There's a car company that has 10 times more Bitcoin than Coinbase. So if Coinbase goes down, Bitcoin doesn't care because.
Yeah, if anything, Bitcoin is going to be the only thing that saves Coinbase and its reputation.
Hey guys, quick question. Just listening, and I'm sorry for my ignorance, but two questions I have about the Coinbase. It's a direct listing, so they're not raising funds to do something. So it basically, and you're looking at the tweeters and all those investors, early investors, bragging about how much money they're going to grab. So basically, for me as just a regular person, when I'm looking at the Coinbase IPO, it's like the way for all those guys to cash out, because otherwise they don't really need money to carry on. Or I'm wrong.
No, you're right. That's one of the underpinnings of a direct listing, is that it's not a primary issuance, meaning they're not issuing coins and the cash that's raised is going into the corporate treasury. It's going to be releasing all the early the early backers of the company. So the founders, some of the early employees, and what they're going to do is they're going to work with their bankers to determine what percentage of the private shares are going to be released and who gets an allocation to be able to do that. So that is ultimately what's going to happen. The benefits to an investor for a direct listing is that you don't have a lockup. So typically, like if somebody mentioned the Facebook IPO earlier, that if you bought into the IPO, you had a 6-month lockup. You couldn't trade it. And Facebook tanked after the IPO, went up a little bit and then it tanked. And a lot of people got out after the 6 months and they're kicking themselves for it. You don't have that restriction with Coinbase because of the direct listing. So you can buy it and immediately flip it. So there is a little more, I guess, investor friendly structure associated with direct listings.
Yeah, I think it's also worth mentioning the other reason to do a direct listing, other than giving founders liquidity and, in the event that you're not raising money, is that you're getting access to debt, right? If you have a sort of a market price for Coinbase shares, those are things you can more easily borrow against. And so if they're really bullish on their future, it's better to raise money via debt than equity.
Yeah, and I also think that it's a strategic thing and a blessing for Coinbase to be able to do a direct listing. Number one, you take a look at their 19 to 20 numbers, and it's just like I said, a slingshot pointed at the moon. They're taking advantage of it, and any type of go to market or go public scenario is going to take advantage of sentiment. So if they were to go through a typical marketing process and have an underwriter underwrite their shares, it might end up like WeWork, where all of a sudden you find some things in the cash flow statement or the balance sheet that just aren't right, and it blows the whole thing up. So I think they're being opportunistic, strategic, and they're definitely going to get they're going to mint a lot of millionaires in fiat.
Okay, so second question. I was watching Coinbase and I thought, and I'm really surprised that they went public, because Coinbase had all the opportunities to become a crypto stock exchange, I would say. Why they didn't take that and they just kind of became another stock in the stock market rather than creating all this crypto-based stock exchange kind of platform? That's what I was hoping they would take toward.
What?
Yeah, I agree. What?
Yeah. So basically what I was saying is Coinbase had the opportunity to become crypto-based stock exchange. So any company can list on the Coinbase stock exchange, but trading happens on the crypto, not the dollar or anything else, right?
Yeah, I think you're talking about a security token exchange. I don't think those are very large. There's been very little liquidity on those things. It wasn't something that Coinbase was particularly interested in.
I think BlockFi talked about maybe doing something like that at some point.
I just think that would serve the Bitcoin and crypto kind of benefits more than Coinbase just going IPO at this stage.
They have to do that in accordance with the SEC. They can't just list things on their exchange and say we're listing crypto stocks here. They can't do that. This is the United States, and that doesn't fly. So I'm not sure what you're talking about, but that doesn't fit any regulatory framework whatsoever.
One follow-up comment on the correlation between Coinbase and Bitcoin. I mean, if you think about it, if everyone just becomes hodlers, that would result in more upside to Bitcoin, but at the same time, that would be a negative for Coinbase because trading volume goes down. So
that's why they don't like Bitcoin.
Yep. No, exactly. I 100% agree. 100% agree.
But not everybody is hodlers. There are plenty of people who don't hodl. And at the end of the day, like Ace Greenberg said, we're in the moving business, not the storage business. He was head of Bear Stearns, a company that went under a few years ago.
Yeah, I mean, that's analogous to custody. It's custody for securities in the big firms. And so say for example, you're an entrepreneur, your company gets bought out by another company, and it's a stock and cash deal. You get a percentage in stock, you get a percentage in cash. Some people feel bullish about the company that just acquired them, so they want to hang on to the shares. They don't want to trade it. So that's a custody opportunity. No financial institution that I know of will custody shares unless you've got a broader relationship that's generating revenue, period.
I mean, Coinbase also has basically tracked Bitcoin as an investment. Coinbase has been the A+, like knock it out of the park, home run venture bet in this space, and it is at par with Bitcoin.
So, Huddle, what would you rather hold over 10 years, MicroStrategy or Coinbase?
Bitcoin. Fuck both of those.
Correct. Get him.
That's the right answer.
In regards to coins lost, I'm reading it's estimated between 3 and 4% is lost annually. I'm not sure of those numbers, but supposedly there's more lost than new coins are coming into the market.
I don't think that will continue.
I don't think that's accurate either.
When was that put out?
And are you just taking like the aggregate of everything that's ever been lost? Because yeah, sure, there was a ton of coins that are, unrecoverable from the beginning because no one thought they were worth anything.
Most Bitcoin is not lost nowadays. It was lost in the early days, like Neil said, when it was literally worthless. I mean, a single Bitcoin is $58,000. That's a mid-sized luxury sedan. How often do you misplace your mid-sized luxury sedan? You know what I mean?
I wonder if it's like an average year over year. So like the first few years was a ton because nobody had any idea what they were handling. And if you include Satoshi's wallet, then it's a shit ton. But like nowadays, I don't think it's nearly as common.
Why do people obsess over how many coins are lost anyway? I mean, you can divide up to 16 decimal places on the Lightning Network. There'll always be coins available. Availability is not the same supply. There will always be coins for sale. They'll always be available to some degree. It doesn't matter how many coins were lost.
It does matter though, because if you say 3 million coins are lost, if you say 3 million coins are lost, then that's you're taking out of the total supply. The market cap is completely shifting.
It's the one variable with regard to supply that's pretty much unknowable. So that's why it matters.
But we know the price. We know the price now.
The price of Bitcoin now is pricing in what the market thinks is available.
There's about 3 million-ish coins lost, and the idea that they're being continually lost over time is stupid.
Price of anything is always at the margin. Nothing is priced on the average. It doesn't matter what the lost coins are. Trading always occurs at the margin. Pricing always occurs at the margin. That's the way pricing works.
Thank you, Tina.
So let me throw out two other things to think about in terms of the Coinbase business that I would probe if I was a journalist. We mentioned brand equity as a strength. We mentioned first mover advantage and market share, i.e. liquidity. The other two things I'm thinking about are the strength of the management team. I remember meeting Brian Armstrong when I was at the Journal in 2014, and I set up a Coinbase account, and that's after they raised their first $100 million from USV. And I was pretty impressed. He had a pretty bold vision, which he's clearly executed on. So I would think what do we think about Brian Armstrong as a leader and as someone who you would trust your money with? And then secondly, the product itself, I mean, I got to say, it's a beautiful product. It's easy to use. How hard is that going to be to copy as they keep innovating, right? They have a big lead. Can they keep that lead on the product roadmap too?
I wouldn't trust Brian Armstrong as far as I can throw him. And I was on their app just recently. I think their UI is shit. It's cluttered and it's ugly and it's confusing.
Condense what that, could you condense what that vision was that he told you, like in a sentence or two?
Well, I think it's, when this is like 6 or 7 years ago.
Hey,
but
Eric
I mean,
just joined. Let's get Eric up here. He used to be a Coinbase employee.
Yeah, I mean, he talked about like basically dominating the market for trading cryptocurrencies. This whole vision of economic freedom, that's a later build he came up with, but from the beginning he was thinking about dominating the market for trading in cryptocurrencies.
I don't think
But
what
here's
they're
the
doing.
question.
I don't think what they're doing is demonstrating economic freedom. That they care about that, but that's just my opinion.
But my question is Binance doing a better job at that vision? That's the question. Like, we don't know Binance's numbers, but I would think
Binance
that
has
they're-
5 times the amount of new signups than Coinbase does. They're executing way better.
Yeah, I'd say Binance is 10 times bigger and better than Coinbase.
Yeah, that's what I'm saying. I think, truthfully, again, I think Coinbase is leaning heavily on the name of Coinbase, like real talk, which is, I mean, that's not a bad thing. It's what you do, right? But I think that because there is no moat, I mean, look what Binance is doing. Look what FTX is doing. I mean, there are a lot of different exchanges popping up, and we still don't have Wall Street in the game yet. Like, that's the thing. Like, when Wall Street gets in the game, the banks get in the game. Like, I think it's going to change a lot.
Damn,
Yeah,
Martin,
we'll see
couldn't you
how-
mention
we'll see
Swan
how
Bitcoin
good
in
the
that list?
leadership
You
is.
gotta get the Swan Bitcoin in that list.
We'll see how good the leadership is as soon as CZ and Sam Bankman-Fried's plans really catch on, and as well, like Lamar mentioned, the big players on Wall Street. But I think something Tina brings up a lot that I haven't heard mentioned since I rejoined the chat like 20 minutes ago is these guys are like middle services. They're going to be outmoded as more and more decentralized options get built and developed and built to scale.
Yeah, if Coinbase is going to be the shitcoin casino, they're in trouble because Uniswap is 2 years old and, almost a third of the way to where Coinbase is. So,
Oh, let's be real, bro. Like, Uniswap, like, they only have like 44,000 people using. Let's just be for real about that. Like, we're talking about 56 million people versus 44,000. It's not even close, man. Like, let's be completely honest about that situation.
Does
I
anybody think
want to
real-
comment.
fake as
I want to
well?
comment
Does
on
anybody-
this 56 million. 56 million is larger than the largest global banks around the world. It's larger than Square. It's also larger than Robinhood. So it's quite high, and we're at the early stages of this parabolic move. This is huge, if you will.
but that 56 million numbers, like basically you gave them an email address that you verified. So that's
No, I
like a
understand,
verified
but
user. So
banks
it's
also.
that's not
just
a very
about
it's a
every-
very not a very
just
good
about
number.
every company you look at, Twitter, banks, Robinhood, they also have these accounts. My guess is it's probably 5 to 10%.
No, didn't someone say like 6 million of their users are transacting actively?
Yeah,
Didn't someone say that?
They said
It doesn't matter because they disclosed the transaction volume, which is 1.3 trillion annualized.
Hey, Eric,
So
what Coinbase number employee were you?
It's hard to say because I started as a contractor and they kept me on as a contractor for like 18 months till I actually joined. So it would be hard to actually pin down a number, but I was in the first tranche of support folks that came on. There was like 6 of us, and in the end, I think there was 3 of us or so.
Yeah, you were there really,
Hey, Eric.
really early though. That's my point, right?
Hey, Eric, did you know Luke Riddle?
Yeah, I do know Luke. Me and Luke work together quite closely. I
Eric,
miss Luke. I hope
You
he's
know,
doing
it's
well.
it's so funny. I literally was the person that orange pilled him. He came with his like fiance at the time, and I taught him. And then next thing I know, he's like, "Lamar, I work at Coinbase." I was like, "What?" Like, it was crazy. Like, he wasn't even fooling with Bitcoin. So now I'm gonna start telling him when this stock goes live, man, I'm gonna need some of it.
Yeah, he was a great guy. So same thing with his fiance. She actually worked on my team for quite a while. She was quite a go-getter.
He's amazing. Yeah, he's an amazing dude, man. I love that dude. But yeah, that's funny because that means he was early with you. I just need some of that stock when it goes live, man. I'm gonna have to hustle him down, shake his legs out. You know what I mean?
Yeah, I mean, the thing that I'm excited about the Coinbase IPO is that, like, this to me looks like the first real event of Wall Street getting involved in a big and meaningful way, and it opens up a lot of other things to happen here. And people were talking about Binance versus Coinbase. Something somebody else pointed out to me is this valuation really kind of sets the terms for exchanges across the board. And so it's interesting to see this happening because Coinbase is going to act as a metric for other major exchanges such as Binance, Gemini, whoever else that might want to get into the space at some point. So
yeah, it's clearly a watermark for the industry. For exchanges that want to issue securities, it's definitely a watermark. But somebody had mentioned that they wanted to shake somebody down to get access to the Coinbase shares when it direct lists. You don't need to shake anybody down. If you've already got a brokerage account and you have the ability to put in your own trades, then you can access it. All you have to do is put in a
I want them free. That's what I'm saying.
Oh, got it.
I want them free.
Different story.
I'm gonna tell him, look, man. I love him to death, man. He's a really good guy. Me and him been cool since then, but it's like he came to like a little conference I had, like a little thing at the local community college, and then after that, he like hits me up and says he works at Coinbase, and now I know those options are about to get busy. So I'm gonna shake him down, man.
Well, what's interesting is seeing all the chatter and activity going on with family offices and ultra high net worth investors. I've already seen a couple of emails in my groups where somebody has access to a pool of public shares. And so what's going on is you've got some people who are early backers who are employees or what have you, and they're finding people who want to buy shares of Coinbase before it direct lists. To get their liquidity early, or perhaps they're worried about the performance, et cetera. So that's really interesting. It happened with Roblox. It's happening with Robinhood. All these companies that are going public, there's always a market for the pre-IPO or pre-public shares.
So, sorry, guys, could I ask a question? It's Van Roch here.
Hey, can you actually hang on real quick? I just wanted to provide the latest numbers on Binance. So Binance, last 24 hours volume, obviously we aren't as sure about their numbers, but still, order of magnitude, $44 billion in the last 24 hours versus 3.2 for Coinbase. Last 24-hour visitors, 26 million for Binance versus 4.3 million for Coinbase. So that's sort of when we talk about Binance sort of doing a lot since launching in 2017 versus Coinbase launching in 2012. That's kind of the performance that we've been seeing.
Yeah, Binance is crushing Coinbase.
Is Coinbase
which Binance owns though?
Other thing too, CZ said publicly that he doesn't sell the Bitcoin fees that they generate, where Coinbase just dumps all their Bitcoin fees.
Oh, and on another note, actually, FTX, Alameda, FTX was doing like 11 or 12 billion dollars a day back in January. So I'm not sure where they are now, but I could assume it's probably 15 to 20 a day versus Coinbase at 3.
If that BNB token were actually equity, I would have bought that thing when it was like $6. But it wasn't equity. It wasn't equity. I didn't buy it
until they changed the white paper. It kind of was.
No,
So
they said, well, maybe I think they just offer you a discount on their trading there, right?
Originally, they were going to use corporate operating profits to burn tokens, and they actually did that, and then they changed the white paper.
Well, burning tokens is not the same as actually having access to their cash flows.
Correct.
So if they were that, I would have absolutely bought a chunk of that because they were the shitcoin casino. But it wasn't equity, so
they still
should have bought it. I guess I should have bought it anyway. I mean, the stupid thing went up so much, but
people are only buying it because it's new, like kind of like Polkadot and Uniswap and what's the other one? Chainlink, and all of these new ones. Like, people want the new ones because they want to get in on the next Bitcoin. They don't want like XRP. XRP's been around.
No. I said Binance.
I know. BNB is one of the new ones, right? Like that's why I'm saying
it's been around for a while. It's been around for a while.
A while compared to 2017. I think it launched in like 2018 or something. It's still fairly new.
I only would have bought it if it was actually equity.
Hey, I want to share.
If I could have equity in that, I'd buy equity in Binance.
I want to share this tweet for the people who are talking about, should investors buy Coinbase or should they buy Bitcoin? This is from my boy Bitcoin Hype Man on Twitter. He said Coinbase's Q1 revenue was 1.8 billion. MicroStrategy's Q1 profit on their 70K BTC they held was 2 billion. So there you go.
You're much better off owning Bitcoin than any of this crap. Honestly, you just buy Bitcoin. Bitcoin's better than owning any of this junk. All this stuff is transitory. These exchanges won't exist in 10, 12 years because no one will be coming out of fiat at that point. They'll just be buying things directly. That's how you'll be earning Bitcoin. It's just the whole world's going to change. Unless they change their businesses, you just want to own Bitcoin.
What's your best guess?
For the record, Hodl said that at 6:15 p.m. Eastern. I just wanted to say that for the record.
What's your guys' best guess for their business and how it'll evolve? Like, because obviously they bought things like Earn.com, and do you think they'll be able to escape the shitcoin casino and build a different business?
No.
Yeah,
they don't want to.
It feels very Googly to me. Like, Google tried to expand into lots of businesses, but they never got away from the fact that really they were just an online ad machine. That's it. That's most of their revenue to this day. They try to diversify into Android and phones and email and storage and all this other stuff, but all of that revenue combined doesn't even like compare even a little bit to what really drives that company, which is ads. Similar thing with Coinbase. They've been trying to diversify. They want to have different sources of revenue besides Bitcoin, but everything else is like very little, relatively speaking. And I don't know. They could try to copy Binance, but given sort of the regulatory burden that they have, I think that it's going to be much harder for them to catch up to Binance. And if they want to go Bitcoin only, then, well, I don't think their CEO really wants to. You're going to need like, some sort of activist board members in order to make that happen. And I don't think that's the right. I think they're inevitably going to be a shitcoin casino.
Here's the thing, like long term, even if they went Bitcoin only, Jimmy, think about it. Like if we talking about hyper Bitcoinization, like at some point you're not going to need to trade your fiat for Bitcoin as much because you'll start getting paid in it. It'll start coming to your wallet, right? So
I mean, they have to pivot to like Bitcoin banking services or something like that, or like, being able to do like a second layer, like centralized second layer or something. Like, they'd have to do some pivoting. It does have sort of a lifespan, and so
The problem with those pivots are like large holders of Bitcoin will only use Bitcoin, or largely will only gravitate towards Bitcoin only services. And Coinbase has just burned so much goodwill in the community. I don't think they're ever going to grab a toehold in Bitcoin banking. They have a short time period to be a shitcoin casino. I hope they squeeze all the juice out of that lemon that they can and ride off into the sunset.
It's like HODL. It's the way you're talking about. It's almost like Bitcoin is using and abusing them, and then once the shitcoinery comes to an end, they'll be done. Is it like Thiel's law? Then everyone's just of the opinion that their foundation in a shitcoin casino, they're not going to be able to escape that. I mean, I could see how they could get into like doing earnings and stuff, but then you start thinking about wages and stuff like that. But then you start thinking about BTC Pay Server and how all of this stuff is eventually moving towards decentralized, open source options that don't charge anything.
I make a prediction that Coinbase is going to be acquired by one of the major investment banks or money center banks in the United States. That's my prediction. That sounds right.
Maybe, but they're just going to be so big. I don't know how you could acquire them.
Yeah, what's actually more likely to happen?
Get acquired by other banks all the time.
Either way around.
Yeah, I think Coinbase is going to acquire a large investment bank.
Yeah, I mean,
already
acquired like
one of the benefits of doing this direct listing is they have an incredibly valuable currency to play around with. And, people were talking about Facebook and Google before, but the reason that Facebook and Google actually continue to grow is because they did really smart M&A, right? So Facebook acquired Instagram for $1 billion. Everyone thought they were out of their freaking mind. It turned out to be probably the greatest acquisition in the last 20 years. And then Google acquired YouTube, and it gave them a whole nother huge revenue stream, which was still based on advertising, but it was a different part of the advertising market that they didn't have any share in. So I would watch out for Coinbase using their currency to do consolidation or strategic M&A.
Yeah, they'll do a merge with Square and with Fidelity or something like that.
Well, that's the thing. The stock isn't theirs. The early backers and the current executive team is going to sell their private shares into the secondary market, and so the owners of that stock, they're not going to have any. I guess they'll own shares themselves, but it's going to be owned by people. So I think that the play here, if they're going to do smart M&A, is they'll go public through a direct listing. They'll have float, and so they'll have a valuation, and then they'll be able to issue debt. With rates so low right now, they could issue long-term bonds. They have a good revenue model right now, and they could use that as a way to acquire other businesses. They're not going to make acquisitions.
Andreessen Horowitz is the controlling shareholder with 25%. So whatever Andreessen Horowitz wants, that's what's going to happen.
Agreed. So I doubt that I doubt that it's going to be that play, but probably issuance of debt.
And Mark Andreessen was on the board of Facebook for a long time, so think about that.
Yep. Well, if that's the case, then what do you guys think Andreessen Horowitz wants?
They want to get acquired. I mean, that's their play. Andreessen Horowitz, that's their whole play. They buy into companies, and they're looking for a pop on the acquisition of that company.
I think Andreessen Horowitz is.
I meant specific to Coinbase, not their playbook generally. Somebody said that whatever Andreessen Horowitz wants is what Coinbase will do.
Yeah,
because Andreessen Horowitz is the majority shareholder.
Yeah,
not,
that's
the
a good
largest
question.
single shareholder. So what do they want? What do you guys think
I
they
think
want?
they're trying to make the next Facebook.
I think it's a decentralized web or Web3 thesis that they hope Coinbase can maybe be a cornerstone of. That's my silver lining or whatever, if you will, or what their plans may be. Of course, it could just devolve into more shitcoinery, more token printing, and casino betting.
So, side note, should I invest? All right, there is a Canadian company with the ticker COIN, and that's what Coinbase's IPO listing is going to be. This is trading on the Venture Exchange, and the name of the company is CoinHodl Inc. with a market cap of 4.5 million. How high do you think that market cap is going to be by about April 20th?
40 million.
I'm thinking about picking up some shares. I got to convert to Canadian dollars, though.
Same thing happened with Clubhouse earlier this year. But I think an interesting pivot for Coinbase once it's. I think it was a stock called Coin that's listed in Canada. But
yeah, it's CoinHodl Inc. I love the name.
Dude, if I ran Coinbase, I would just raise a ton of money and then buy Bitcoin.
Yeah, that's what they're going to do. I think that's what they're going to do. Over the next year, they're going to acquire more Bitcoin. Because I don't see how they can stay solvent otherwise.
What do you mean? They're making tons of profit. Why would they not stay solvent?
In 2020, they did. And in Q1 2021, it looks like they are. But eventually, when prices stabilize and the shitcoins sell off, I don't think they're going to have a lot of solvency. There's not going to be as much demand.
I agree with you 100% there. As soon as altcoins seem less appealing and people have better options for the shitcoin casino, their Bitcoin volume has been just horrendous lately, which is great. It means people are buying and keeping their Bitcoin. But I think they're going to run into trouble if people basically stop shitcoining as hard as they are.
Yeah, there's going to be a lot of people with sour grapes that are going to not want to. They're either not going to want to get back into Bitcoin, or they're not going to want to go with Coinbase again. So they're going to have to profit off of the next big Bitcoin bull run. So, yeah, I think they're going to have to buy Bitcoin, especially when all of what the miners are producing is getting bought up right away. They're going to have to buy up on the next tapering off.
But can we trust Brian Armstrong to buy the dip and hold it? It would be even worse for Coinbase if they bought 100,000 Bitcoin and then were forced to sell it off. And
or they just buy it back from the customers.
They haven't demonstrated conviction on Bitcoin itself for like 6 or 7 years. So I don't see them changing that.
Yeah, they're not gonna buy Bitcoin. They should, but they're not going to.
Yeah, and if you were talking about what does Andreessen Horowitz want, well, just look at what Andreessen Horowitz is doing. They've got A16 crypto, which is they raised, I think it was $300 million 6 months ago for specifically to invest in DeFi coins and NFT coins and all this
the
stuff.
The first one was 300. The new one is 500.
Oh, right. So now they're going to get some liquidity on this. So what are they going to do? They're not going to buy Bitcoin. They're going to pile it into all this other shit.
Well, I think this can guide us in terms of Coinbase's history with crypto assets. So if you take a look at the cash flow statement in the S1, and this is consistent between 2019 and 2020, proceeds from settlement of investments. That's a line item, and there's 2 lines. Purchase of crypto assets in 2019, they purchased 271 million of crypto assets, and they sold 272 million worth of crypto assets the same year. In 2020, they bought 528 million. They sold 574. So as soon as it comes in, they're selling it.
I wouldn't be surprised if they're actually like, do they have a breakdown of what they're selling? Like, I wouldn't be surprised if it was comp tokens and Yearn tokens and MakerDAO governance tokens and all this stuff, so that they're making a market for all these DeFi pre-sales that they buy.
Well, I did see a line item for warrants. They've got about, I think the line item was 1.5 million coins of Ripple that they have a warrant on. Generally, you get warrants when you buy out a company or you purchase securities, so you make an investment, and it's an equity kicker. So it's a sweetener to the equity that you've just purchased. So I don't know if they've made an acquisition and that acquisition had some coin attached to it, but they've got warrants out there for Ripple.
Yeah, Ripple has a lot of warrants out on it right now.
I think we need a warrant out for Coinbase.
Wanted dead or alive.
Wanted 80% drawdown. So I guess the consensus here is nobody's buying Coinbase.
Why would you? You could buy Bitcoin. It's way better.
Let the boomers buy Coinbase. We'll buy Bitcoin.
It's a nice trap for everybody that's enthusiastic about crypto but don't really get Bitcoin yet. They'll learn.
That sums it up perfectly, Jimmy.
Or maybe they're not enthusiastic about crypto or whatever, this whole space, but they've been looking for something they're comfortable with to get some exposure to it. They're not super enthusiastic about it, but they see a trend, and this could be a nice little, the first orange pill that they get is riding Coinbase up and then down. And then they're like, you know what? I just need to buy the underlying Bitcoin itself.
It is probably going to drive the price up, though. Like, this is probably going to dominate for the week or whatever, and it's probably going to draw a lot of eyeballs to people that want to buy Bitcoin.
I think it's the other way. Whenever Bitcoin price goes up, Coinbase will follow. It'll be kind of like altcoin number one.
Yeah, but this specific event, I think it's going to be a little bit of the news cycle about the IPO is going to lead people to just say, oh, that's so expensive, I'm just going to buy Bitcoin.
Possibly. I don't know. Like I could see lots of bad scenarios for Coinbase, which would be terrible. Like, they could become a sort of super shitcoin casino, like Uber ICO platform kind of thing. They could, like, I'm sure their board members are saying, why aren't you doing what Binance is doing, which is essentially list every shitcoin, collect fees, and make their own token and do all this other crap. I'm sure they're talking about it. So it could get pretty bad. And it might require some regulatory action or something before they really stop. But yeah, there's so many ways in which this could go really badly, and ultimately just hurt Bitcoin and set Bitcoin back because of their stupidity. But yeah, I don't know.
So they're actually not the first traded exchange public, right? Like you can look at, and I've been tracking Voyager as a little bit of a proxy, and I don't know how scientific it is, but they're up roughly 25x over the last 3 months, trading at like $30 a share. And I gotta believe that like if Voyager is getting that kind of attention, Coinbase is too. And when you look at some of the relative metrics that they listed today, they pretty much track with what Voyager's growth has been, Q1 over Q1 and Q4 to Q1. So interesting parallels.
So you're thinking that Coinbase can get to 2.5 trillion?
I don't know where that math just came from. Oh, 28x growth on that? No, because I think that's built into the price. The market cap of Voyager is significantly different than the market cap of what Coinbase is likely to be. So yeah, I don't think that necessarily translates the way you're thinking, and that's not what I'm saying.
What do you guys think about the trade or the idea that people who've been watching crypto, especially boomers, Gen Xers, who don't feel comfortable buying Bitcoin, would just feel comfortable buying Coinbase? And it's just as simple as that for them. They want exposure to the sector, and so they're just going to buy Coinbase, and then that's it.
I mean,
especially a Roth account, sure.
It's
yeah. Plus,
go ahead.
No, plus from a traditional fundamental basis of looking at an actual company, like the company looks super healthy. Like what baby boomer's gonna sit back, see those numbers and go, oh, I'm not gonna invest in that. You know what I'm saying? Like this is what they're used to.
Yeah, that's what I've been thinking. I've been listening to this whole conversation, thinking this the whole time. It's like I understand why everybody says what they're saying, and but ultimately, I think Coinbase is probably going to do pretty well.
Yeah, Wayne, I agree with you. I think this is kind of like the ultimate boomer entry point is through traditional stock markets. So, and they keep an eye on these IPOs.
I'm also thinking about the narrative, tomorrow, day after tomorrow, CNBC talking about this being bigger than Goldman Sachs. That narrative is kind of like a new paradigm, and that's going to just lift all boats and definitely will help people kind of shift their mindset in terms of how important Bitcoin is.
I mean, they could be on CNBC tomorrow saying this is the next Google, the next Facebook. Don't miss your opportunity for getting in at the ground level. And for a lot of people, the way that they invest, it's really just that simple. So I think that they'll do okay.
There's going to be a ton of options traded.
It is going to crash so hard in a year in a Bitcoin bear market. It's going to crash so hard. Right. All this revenue goes completely off a cliff. It's pro-cyclical. Coinbase is high beta to Bitcoin. If Coinbase goes up to like 200 billion, I would see it sub 50 billion, sub 30 billion in 18 months.
That's exactly
beware of that as well.
And that's the thing. None of us know what these other banks are doing, man. Like none of us know about them bringing on into your freaking banking back end and your online banking. Please click the button to buy Bitcoin. Like nobody knows what they're doing. And if that comes on in droves this year, like I'm with you, Corey. Like where that revenue is going right out the door.
Well, we know specifically that's one of the business lines that NYDIG is setting up. They're using all their connections and their expertise, and they're building a tech services business, and they're basically doing like the enterprise, the institutional version of like Wire or Simplex. And their goal is to have that convert to Bitcoin button and a Bitcoin balance and a dollar balance in your Bank of America account, in your Citi account, in your Chase account. That's a business that NYDIG is actively chasing.
Right. And if Fiserv gets a hold of it, like think about they build that, we don't know that they're building something out. And every bank I know pretty much uses something from Fiserv. So it's like you're dealing with some behemoths out here, and you basically just opened it up and showed everybody what you're doing. Like it almost is like Coinbase should have stayed private, man.
Well, what they have to do is they have to keep the Ethereum altcoin DeFi pump going with help from Andreessen Horowitz and NFTs and Clubhouse and sort of the whole Silicon Valley cabal. They have to keep the whole thing going long enough for all the early shareholders to exit.
assuming a Bitcoin bear market next year is going to be a very dangerous assumption on your part, Corey.
But
Yeah,
they
can
will
you
do what
rule it out,
he's
though?
saying though.
We don't know if that's going to happen or not. I'm not trading it either way.
Well, there's no way to know anything. But I think you're not going to see much in the way of a bear market much this decade, unless the Fed screws up. Because this changes the conversation. Fact of the matter is, Coinbase, whether you like them or you don't like them, Coinbase being a public company goes a long way to legitimizing this space. You may not like them, I may not like them, but that doesn't matter.
You know, I would bet you.
And that's a huge. I'm not betting. I'm not betting.
With Jimmy escrowing them,
Corey,
that
it's
we'll
not about
see a
betting.
Bitcoin pullback of 50% or more this decade.
Changing the narrative. You're watching the world change. If you don't understand that, you're missing the story.
No, I'm specifically talking about a big pullback, which I don't think we're done with.
You may or may not see a big pullback. You have no idea what you're going to see.
Well,
you know, the last 10 years did not write all forward-going future history. That's a bad assumption.
What's a big pullback?
So
Like
I just said over 50% pullback.
Yeah, maybe you'll get 30 or 40 or 20. But you're gonna have a lot of people. You're gonna have a lot of people plowing into an asset which has become legitimized as you see more and more legacy players get into this.
You're going to see a lot of paper
Not a payout very differently. Very dangerous. You sound a lot like Plan B, Corey. He thinks
You're going to see a lot of paper.
Maybe you and Plan B are on the same page on this one.
I have better math.
I'm sure there's going to be a pullback. I would be willing to bet on a more than 50% pullback in the next 5 years. I have no problem betting on that.
Yeah, 5 years. I didn't say 5 years. I said next year.
You said the next decade. You said the rest of the decade. That's 9.
Yeah, you said next decade.
Rest of the decade, you'll have a 50% pullback at some point, but that could be from a lot higher numbers.
Well, think about a 50% pullback though. A 50% pullback in Bitcoin is like an 80-90% pullback on altcoins. That's a huge revenue.
And all I'm saying is Corey's assuming you're going to have a big bear market next year. You may or may not.
Big bear market. I didn't say big bear market.
You said bear market. You said it's going to kill. It's going to kill everything.
If I didn't say shit about everything, I said it would kill Coinbase's revenue and it will go off a cliff. And I think you didn't see with Google and Facebook. You didn't
maybe you're watching a huge change take place. You're watching a huge change take place. Be really careful thinking you know the future based on the last 10 years. Lots of
no shit, Tina. Tina, you're quoting me to myself, but we're talking about Coinbase here, and I'm saying that their revenue.
You were talking about Bitcoin. You were talking about Bitcoin, Corey.
It starts with Bitcoin, but the point was what that actually means for Coinbase.
Do we know?
Well, maybe that. But maybe that doesn't.
That I gave was.
But maybe that doesn't happen with Bitcoin. That's the point. The point is, it may not happen with Bitcoin.
All right,
watching a lot of things happen.
Like what's the time frame you're saying? Is it the next decade or the next 2 years?
No,
how long is it going to not have a 50% pullback?
The next few years.
So you're saying for the next 3 years, let's say next 2.5 years, you don't think there's going to be a 50% pullback?
Possible, but I think the odds are greatly diminished from what we've seen in the last 10 years. I think you're watching a massive shift in legitimacy in the asset.
I think the chances are greater than 60% that we're going to have a 50% pullback. So I would gladly bet on that.
I guess we're going to find out, Jimmy, because neither one of us know, but all I'm saying is you're watching an asset which has been an illegitimate asset for a decade become a legitimate one. And that's a huge shift in psychology in a marketplace. So you've got a lot of players.
It may or may not be a big psychology. I'm just talking volatility. I mean, 50% pullback it happens on legitimate assets too. It's not about legitimacy or illegitimacy.
It happens. It does. It happens with regard to what the Fed does. So yeah, if the Fed pulls the plug on everything, sure, it'll go down.
No, I mean, like Bitcoin, it's happened on assets that the Fed had nothing to do with, right? Like. It's the pullbacks and like sort of like new paradigm. Those things can be related, but often aren't. And what I'm saying is you're probably going to see a greater than 50% drop over the next 2 years. And when that happens, I think I agree with Corey. That's going to hurt Coinbase significantly. And, bah humbug to all of this legitimacy stuff. When people are seeing their portfolios like crash by a significant amount, there's going to be some panic and blood on the street. I don't think that's a very hard or difficult like prediction to make. Like that. That's just sort of psychology.
I think you're making assumptions about how this plays itself out.
All right, then Tina, make a bet then. Okay, do you want to bet on it or not? Because you're shitting on his thesis. No, you're shitting on his thesis. Tina, you're shitting on his thesis without actually backing it up with words. If you want to actually back it up, then bet on it. Put your money where your mouth is instead of just shouting all the time.
It is. I own Bitcoin. Bitcoin. I back it.
Listen, guys, it wasn't the point of the comment anyway. Tina, if you let me just talk for a sec. My point was actually just to contrast with the point Wayne was making about Google and Facebook. And basically what doesn't happen with Google is search traffic falling by like 60 to 80% or even 30%. It just doesn't fucking happen. It expands forever. Just like Facebook's user numbers have just gone up this entire time. So there's just not that opportunity for some core metric at the middle of your business to completely fall off a cliff and to have that sort of be reflexive in your stock price. And Coinbase does have that opportunity in this market where essentially whatever happens with Bitcoin, alts are high beta to that, and Coinbase's trading volumes are high beta to crypto trading. So it will just go down to absolute shit. The reason they cherry pick their numbers, the reason they are constantly moving back and forth between monthlies and quarterlies and yearlies and doing crazy shit in their S1, like saying like the best quarter of 2018 was this and the best quarter of 2019 was that, is because the shit does fall off a cliff for them regularly. And once they get this thing out in market and people are actually looking at the numbers quarter by quarter, man, some people are going to be roundly disappointed whenever Bitcoin even experiences like a 30% drop. Coinbase volumes are going to go down by like 70, 80%.
Was there a catalyst for the last bear market, and is there something similar we're going to see for the next one, you think, or it's just totally cyclical?
Yeah, I think someone prominent like insulted Bitcoin, and then that set it off. No, I'm just lying. Who knows?
Last one was it went up too much too fast.
Are you trying to figure out? Are you trying to figure out why we're sideways? Is that what you're saying? Because I know exactly why we're sideways, and everyone in here knows why we're sideways. It's the laser eyes.
Yeah, I knew you were gonna say that.
It's because of the laser eyes.
I'm saying it went to 20,000 and then it went all the way down and way more than it should have. And, that didn't necessarily have to happen that way. Going up too fast, isn't great. And we might see that again, but it could have leveled out, gone sideways again, and then went slowly. We went into quite a long bear market after things were real hot. And it didn't seem like necessarily it's explainable. But why would we see that again versus, or is it just really the cyclical nature of the stock to flow? It's just correct, and we just have to look at it. I don't know.
I think it's definitely because Mercury was in retrograde.
Like 2 weeks, wasn't it?
That's accurate.
So it is the log of the laser eyes, given some adjustment for inflation of celebrity usage, that has caused the sideways action in Bitcoin right now.
Sideways action is perfect in a bull market. You couldn't ask for better than that. Sideways action at the highs. This is fantastic.
Why is that, Tina?
Why is that good?
Yeah, I'm trying to understand. Yeah.
Going sideways at a high. Going sideways at a high means somebody's losing their Bitcoin and somebody's sucking it up and buying. You notice it's not going down. Now, if it crashes from here, that's another story. But if this continues to go the longer it goes sideways, the bigger the up move explosion is going to be. So going sideways is not bad at all. It's a goddamn $58,000.
Okay, so the reason is that they're just taking it. They're taking a lot of it off the market, which will further drive the price up when the next ride up goes.
Yeah, somebody who's selling. A friend of mine tells me they're selling to put it into ETH because they're looking for the fork on 2.0, which comes out April 14th.
Man, I saw a chart of people and how much Bitcoin was moving into XRP. It was crazy. So it's like a lot of people are selling Bitcoin off right now, but to Tina's point, it's not killing the price. So people are selling it off, but somebody's sucking it all up. So,
well, the sellers
wait till they try to get it back. They're going to pay up for it.
And speaking on the rationale of buying Coinbase versus Bitcoin, I can see some investors going the picks and shovels route, and that's worked for the miners, right? The Riot, for example, was 50 cents last year. Now it's $50. That's 100x return. So I can see the, buying the picks and shovels versus the currency. I can see someone believing that. I would rather own Bitcoin, but I mean, I'm just in awe of some of these Bitcoin miners. The business model doesn't make sense at all to me, but somehow they've gone up 100x in a year.
They probably
Mike,
there's a shortage of chips. There's a shortage of chips, isn't there? So the hash rate should probably be climbing a lot higher than it's climbing.
Yeah, Mike.
Isn't that right?
Mike, I also think that the space is maturing, and some sophisticated investors are trying to get positions on that maturing mining. They're going to be able to get access to capital. They're not going to be blowing off their Bitcoin. They're going to be able to hold it using public funds. I think there's a play there.
hey, Mike, I got a question for you. What picks and shovels companies do you know from the gold rush?
Levi's. That's
Blue Jeans.
But that's the only one, bro. And are they doing really good right now?
The Irvine Company.
San Francisco. I don't know. There's a couple of things.
Didn't Wells Fargo start around there or something?
Yep. I'm just saying, can I just get the gold? Like, people who held on to their gold, did they not do okay?
They did, but it's common knowledge that the people who did the best during the gold rush were the picks and shovels.
You said during, though. I'm talking about now, Tim. I'm talking about now.
Yeah, if they held the gold since 1880.
But this is what I'm saying, bro. That's what I'm saying.
300.
Hold on. Give it to your kids, man. Pass it down.
Comparing Bitcoin to the gold rush doesn't make any sense at all. And you don't want those shitty businesses. You want Bitcoin. There's much less risk in holding Bitcoin. The upside's bigger.
Well, it doesn't help that we're pitching it as digital gold. So, I mean,
that's just so people can understand it. And by the way, the market cap should be in the hundreds of trillions of dollars. Just because morons classify it as gold's market cap because they don't understand it doesn't mean a damn thing. That's just absurd. You got people who just don't understand that it's not limited to the market cap of gold. Those are just people who just don't get it.
I just want to know, Tina, when you're talking to us, are you like climbing a mountain at the same time?
I'm taking a walk, so it feels like I'm climbing a mountain. Fortunately, the ground is flat. If I was climbing a mountain, I'd be dead on the ground already.
And so I think part of the problem of looking at successful mining companies is you're not looking at all the ones who tried and failed. You really need to get the whole picture to get a sense of that kind of thing.
No, I'm looking at a company that spends 95 cents that's making $1 of Bitcoin and spending 95 cents of that on electricity and saying, why is this stock up 100x? So it's not just, I mean, like, does that make sense? If I had a business that was, I sold a burger for $1, but it cost me 95 cents. Why would I have
are those if you do that a whole lot of times, but if you do that a whole lot of times, bro, if you do that 1 billion times, bro, you got a pretty decent business.
Do they have Bitcoin on the balance sheet?
Yeah, I'm just speaking as a bag holder of MSTR because I'm looking on cointreasuries.org and I'm saying, okay, this company has 10, 20, 30x as much Bitcoin as these miners do, and it'll take 100 years for these miners to match what MSTR has. So I'm like, why isn't it figuring out?
MSTR is much more recession proof than all of these other companies. Like I'm planning on buying a ton of MSTR over the next couple of years, not just over the next couple of months.
Why wouldn't you just rather own Bitcoin? Why the hell would you want to buy MSTR?
Because I got money already in the market and I don't want to have to take it out.
Bitcoin, because let me tell you something. If the system were to crash, you won't get your money out of the banks. So you're better off with Bitcoin either way. You're better off if what some people think, which I don't agree with, you got a hyperinflation, or if you get a crash. Either way, you're better off with Bitcoin. You don't want to own those. Look, I like Michael Saylor, and I own some MSTR, but your money is much better off in Bitcoin than stocks.
Yeah. I mean, I'm talking about for like retirement.
Yeah, Bitcoin is a better choice. Bitcoin's a better choice. And I own calls on MSTR, but Bitcoin's a better choice.
I'm not putting any new money into the market, but rather like what I already have in. You know what I mean?
It's actually a rocket booster on your Bitcoin holdings. If you're right about Bitcoin, those MSTR calls will take your Bitcoin even farther. So
you know what? There's much less risk, and on a risk reward basis, you're much better off with Bitcoin.
So then why do you have MSTR calls?
Because I played that stupid game that you just mentioned. I'd be a lot better off with a Bitcoin. That was a stupid thing I did.
Embrace your degen.
It was stupid. I'd have been better off with a Bitcoin.
So an interesting figure is of that $3 billion in cash flow, that increase they had, 2.7 billion of that is attributable to what they just have in customer accounts.
You don't count restricted cash and cash flow. Restricted cash belongs to your customers.
You do if it's part of your balance sheet. It's part of your balance sheet.
No, you don't. You don't count the restricted cash. It's not part of your business. It belongs to your customers. It's not part of your business cash.
Page 112.
This is like a bank. This is like a bank or a brokerage. You don't count that. And generally, you don't look at cash flows on financials anyway.
Okay,
Tina,
I'm going to respectfully disagree with you here. I'm going to respectfully disagree with you here. Take a look at any bank, and you take a look at their deposits. The deposits are owned by somebody else, but they definitely list them as assets. They are assets on the balance sheet of the bank, and they're subject to general creditors.
Actually, they're a liability on the balance sheet, but details aren't important. Assets are the loans. Just FYI.
But regardless, they belong to it is a liability, and the reason why it's a liability is because they have the cash on, and they put a contra indicator for the liability that they have to pay back. But it is definitely assets of the bank. And if the bank goes under, those deposits are subject to the general creditors, the secured creditors of the bank.
I'm aware of that. What I'm saying is when you look at the cash flow of a business, you're not tracking the cash flow of the customers. And this is not a bank. This is a transaction processor. And they hold some cash.
Yeah.
This is a transaction processing business. This is not a bank business.
Of course. So I think
you can't make a direct comparison.
There's a mischaracterization of that $4 billion then, because whoever made the comment, that is, their balance sheet. That's not the cash flow statement. The cash flow statement will actually show the revenue off the transactions, and it was almost a triple over last year. It was like 430 something million last year. It was like a little over $1 billion this year. That's cash flow. That's revenue. That's
right,
not
but it
deposits.
wasn't. But it wasn't $4 billion. Because $3 billion of it was restricted cash, which belonged to customers.
Right. It says the change in custodial funds due to customers included in net cash from operating activities. So, like, that's 2.7 of that 3 is customer cash, customer cryptocurrencies, valued at fair market value.
So I think the consensus here is that we just, this is good for Bitcoin in a way. It kind of sucks because they're going to keep pumping out liquidity on shitcoins and DeFi tokens, and everybody should just buy Bitcoin and also the fake coin on the TSX.
Yeah, I think it tells us that there's going to be a lot of new capital that wants to invest in Bitcoin businesses. Like, people are going to see the wealth that the Coinbase people made, and they're going to want to get those kind of returns too. So if you're in the Bitcoin industry, that's good for you.
Yeah, and good for Bitcoin exchanges. Good for valuations of private equity of Bitcoin exchanges.
So Tina, the one thing I'll say is I agree with you as far as if the decision tree is buy the direct listing of Coinbase or use those proceeds to invest in Bitcoin, I'd choose the latter.
I own Bitcoin. I wouldn't own Coinbase at all. I have no interest in Coinbase.
Unless you have a lot of money and then you buy majority shares and force them to delist all the shitcoins.
I would still rather have Bitcoin than anything else. And if I have a lot of money, I'd still rather have Bitcoin.
This is a real Bitcoin bull, gentlemen.
I love Bitcoin. I'm sorry. I am an unabashed bull. I love Bitcoin.
Me too.
I love listening to all my favorite Bitcoiners talk about Bitcoin in Cafe Bitcoin.
Shelly, all I have to say is I'm very, very grateful that you had a nice, successful flight and you're here to talk to us again.
Thank you, Florida.
I don't fuck with airplanes, so cheers.
I fuck with them a lot.
Bitcoin, Tina, might you want to talk about why Bitcoin's potential is greater than gold?
Oh, come on. You gotta be kidding.
Get comfortable. Get comfortable.
Get the popcorn out.
If that was a serious question, go read the bullish case for Bitcoin and then come back.
My answer is a serious answer. You gotta be kidding. And when does Michael Saylor debate Frank Giustra?
To be determined, I believe.
The fact that he owns frank.com is pretty fucking awesome.
That is awesome.
Wait till he owns Giustra.com.
That's the most baller thing I've heard all year long. He's just like, oh yeah, I found out I own frank.com and I'm going to redirect it to my Bitcoin bull page.
We should redirect it to that song that girl did about him. Because he's a bull.
Oh,
that'd be hilarious.
What happened to her? Did she disappear? I haven't seen anything in a while.
Bruce, are you still here?
Yeah.
And what do you think about the update on the Ripple situation with Coinbase, with them so close to going public and Ripple for some reason pumping to $1? I heard rumors that they're going to relist it.
I don't know. I mean, I think it would be a mistake to relist it. Especially it puts them at a risk. Somebody mentioned earlier the risk of a lot of alts becoming, being thought of as securities cutting into their revenue. The real risk is being charged for being an unregistered securities exchange. And that could be absolutely catastrophic.
Oh yeah.
So here's the thing. So I mean, I'm not a lawyer, but just hear me out. Suppose I was the prosecution. I would go into Coinbase. If Coinbase has Ripple, list XRP. If I was a prosecutor, and again, I'm just speculating here. I'm not a lawyer, but if I was, I would say something like, get them in there, file the action, and you go to Coinbase and say, are you aware that you need to be a securities broker to be, you have to be licensed to sell securities? You're aware of that. There's the 33 Act, 34 Act. I think it doesn't even matter if they're aware or not. It's federal law. Number one. Okay, number two, are you aware that the freaking SEC, who is tasked with defining and enforcing these laws, clearly said XRP is a security? Did you hear that? Did you happen to see those memos that came out, Coinbase? And then, what is your defense from that? Oh, yeah, we saw your memo there, SEC, but, we saw it. we were reviewing Twitter and we thought
Yeah, but
that,
we want to build open finance networks. So
yeah,
this
we
thing
thought that
applied
you
to
were
us.
wrong. We thought you were going to lose. It doesn't work that way. It doesn't work that way. It's like if the DEA goes to Walgreens and say that CBD lemonade you have is THC. That is illegal. You're selling marijuana. You're not a dispensary. Cease and desist. Or they just say no. They just bring an action against the CBD lemonade company. They just bring an action. Do you think Walgreens is going to still carry that? No. Because it's like if the DEA says it's freaking marijuana, then it's on you to. I mean, even if they prove it, you're still screwed because you have the regulator say. So if in my interpretation, if the SEC says this is a security, it's a freaking security. They're the enforcement agency, and I don't know. Maybe it's just in my blood, but I don't understand why people don't get these rules. And it's not me being pro rule. Anybody who knows me knows that I'm basically an anarchist. It's just pro reality. It's exactly the same as the drug thing. You can't just sell drugs in Times Square and be like, oh yeah, we're decentralized. Like you're either a dispensary or you're breaking the rules. And no regular big company like Coinbase in their right mind is going to break the rules. But so anyway, I think it would be a bad idea.
And why do you think Binance still has it up?
Well, Binance is it not Binance US though, dude, or maybe Binance US does. I don't know. I think it's more aggressive. I wouldn't do it. I thought it's crazy. I'm pretty conservative about these things.
Binance US has 0.02% of the volume of Binance.com.
Well, it's a different. If you don't take U.S. investors, it's a different story. But if you take U.S. investors and you're selling something that the SEC, the head securities regulator, says is security, in my opinion, from my understanding of the rules, you're breaking the rules. Like that's the whole point of the securities. I mean, a security is a security. It's exactly the same as selling Tesla, which you can't do unless you're FINRA member, registered broker dealer.
Well, to support that, I mean, any participant in the markets in securities, whether you're an issuer or an agent, broker dealer, what have you, it is your responsibility to know whether or not you're selling a bona fide security, and they can place a consent order on you to cease and desist because sales practice violations, essentially.
Yeah, and it just seems like such a crazy strategy because I heard some people. There was even one. I don't remember who it was. It was a small exchange or a fund or something. They were arguing about it on Twitter, and they were basically like, "Well, I think they're going to lose." And again, I'm not a lawyer, but I don't think that's a defense. I don't think you could. Go back to the lemonade example. I don't think you could go in and say, "Yeah, we knew the DEA said it was marijuana."
Was the small fund Arrington XRP Capital by chance?
No, it wasn't them. But I like Michael. I like a lot of the people there, other than Ben Lofsky.
Oh, that's that other Brad guy. He's a pretty much.
Yeah, he really
Bitcoin
scored a lot of
all the
points
time.
the other day, saying Bitcoin costs 75 gallons of oil per thing. But one more thing on this. I don't even remember what I was going to say. It was something stupid about Ripple. Screw Ripple.
Lemonade. You were talking about lemonade.
I don't remember. I lost my train of thought. But the idea that you can just hope that you're going to lose, I think is just or hope that they're going to win the case and the SEC is going to lose is, I think, a bad strategy. And I saw this as the kiss of death when it was first announced. I was like, I think it was like Christmas Eve or something like that, Eve, and I was like, holy crap, XRP's toast. Because to me, as a securities person, it's like you cannot do anything with securities unless you're licensed. Trust me, I'm licensed. This is just the reality of the U.S. And if the U.S. says it's a security, everything's going to grind to a halt. And I think, maybe they're waiting for the case. They really, really want to make sure. But if it is like totally decided that it's a security, then it's really going to change how it moves, banks interacting with it, all kinds of ripple effects.
Pun intended.
That will.
You got to
just
trademark
grind
that.
it to a halt. You just can't use it as a security. I mean, how much do you move your Tesla around? I mean, anybody here send me some Tesla to my phone? Of course not. Securities don't move that way. It's a totally different thing. I mean, it would be great if they did. That's a whole nother discussion.
Okay, so Bruce, on that same line of thought, then we know that we talked about this already. Andreessen Horowitz is like a huge
early investor in Coinbase. They're going to benefit a lot from this. They've got huge bags of pre-mined coins and allocation or whatever to all these DeFi coins. And the FATF just recently put out that updated guidelines, which majority affects DeFi more than Bitcoin. So how do you think they're going to thread that with Coinbase is clearly saying their mission here is to, you know, put the financial rails on blockchains, i.e. like pump their Bitcoin, their ETH DeFi bags, and Andreessen Horowitz is pretty much aligned with that mission, obviously, if you look at what they own and what they're doing. So the regulators are kind of like standing there saying, well, this isn't decentralized and you guys are going to have to comply. So how do you think all this resolves with DeFi regulators, Andreessen Horowitz, and Coinbase now going public?
Well, long term, I think it'll all eventually just wash out. I mean, they're crappy business models. You know, the securities are awesome. Securities are great. Securities are wonderful, wonderful structure because it includes equity, which is probably one of the most brilliant things invented in the last 400 years other than Bitcoin. I mean, it's incredibly good structure and it's well proven sharing risk and reward between investors, which is a crucial piece of capitalism and the way the world works and innovation and growth and all the awesome things. So securities are great. I mean, stocks are great. They're just awesome. And when you go and strip out everything that makes it a security because you're afraid to play by the rules and you don't like the rules, so you go to a lawyer and say, make it not a security. And they say, okay, remove all power, remove all ability to share cash flow, remove this. You end up with nothing left but a gift certificate to a store nobody wants to shop at, or a participation trophy to a freaking a losing race. It sucks. It's just a stupid token that doesn't do anything. You don't have any rights. You're not an owner. You know, and the ones that are laughing all the way to the bank, who are the actual owners of the actual enterprises, that if you follow the cash flows, are the VCs, and not just Andreessen. But I mean, I think VCs their game is getting done anyway, partly because of this bigger picture trend.
So how much do you think that they're going to pile into like supporting these tokens? Like Andreessen Horowitz is going to make bank here. So how much are they going to like pile into fighting?
I don't know. I mean, the model is going to continue until it doesn't. It's still profitable as of this cycle, but I think it's a crappy model because eventually people wake up and say, "Oh, this doesn't actually give me anything." You know, it's literally like a sticker that says, "Yeah, I support Disney." Like that's not the same as a stock certificate that says I have a share of Disney. You know, so I think it'll go. They'll just all eventually, long term, just get wiped out because they're not worthwhile instruments. And I think
we saw Bitmain lose all their Bitcoin and lose their IPO by supporting Bitcoin Cash. Obviously, Andreessen Horowitz is not going to do something stupid like that. They're not going to like pile all their money into this. Hopefully, I don't know. It feels like we saw what could happen. The worst case scenario with Bitmain losing everything pretty much. Andreessen Horowitz is like fighting the same type of battle. They're fighting against the market, really. They're trying to create the market.
Yeah.
And they're fighting regulators.
I mean, the bigger macro picture on Coinbase is they have a lot going for it. It's one of the most valuable companies in the world. It's super hot. It's at the center of the hottest industry. If you did have to invest in a company related to Bitcoin, that's definitely one of the biggest opportunities and soon to be one of the easiest and most liquid. I mean, they got a lot going for it. I mean, people in this room, most of them believe the narrative I think you believe and I believe, which is that Bitcoin is money and it's the real money, which is why it's kind of funny they only stacked 4,500 coins. Oh my God, how pathetic! That'll go down in the history books, I think. But money's shifting, and yeah, they're an important place. I mean, there's only 10 banks larger than them in the United States. You know, they're right up there. You know, so they could acquire one of the next, number 50 bank with pocket change now, $10 billion, $20 billion. They could acquire a good size, like these are real businesses, and. So they'll be all right, probably. I don't know if it's too much of it, and they could always become a securities broker too. I mean, I think that's where the opportunity is. I don't want to give them too many ideas because it's my business, but I could maybe help them if they want, if anybody's listening. but no, I think that there's other opportunities they'll have. I think eventually you're going to have Bitcoin, and I don't know, maybe there will be some other things like Monero or something. But I think it's ultimately going to be it'll be Bitcoin and securities. securities are still going to exist, but I think all the if you have coin market cap of the future, I think it's all going to be securities, because securities are already proven as a good way to share risk and reward. And the next Tesla is going to be some kind of maybe it'll be a tokenized security. I don't know, but I don't think this model of just like comp tokens that aren't even that aren't equity are going to work. Why would anybody buy that crap? I don't know, but I've been wrong at least one cycle, so who knows?
Well, it definitely seems like they're paying more attention now that Coinbase is going public. It's shining a big spotlight. Like, they have to make a decision, and they are with Ripple right now. Something, however this resolves, I think it was Joe that usually points out that the Ripple defense, it was like asking the SEC for the specific guidelines of what made them determine the Ether case.
Yeah, I saw that.
So that'll be interesting to see, because if that comes out, and then the Ripple defense can argue, well, Ether should be a security too, and then they actually agree and say, you're right, it should be.
They got some good lawyers, no doubt about that. Because I'm not a fan, and I think it is a security probably, and with probably an unregistered offering. And I'm just not a fan of the project in general. Like I said, I like some of the people there, but definitely not Ben Losky. And but even having said that, I was pretty impressed by their reply. I mean, clearly they have some really, really smart lawyers. I'm in the securities business, but I'm not. I read a lot of stuff, but I think I could tell maybe great lawyers from average ones. But they seem to be very, very good lawyers. Like they made a pretty solid of the cases you can get.
Well, there has to be something in the fact pattern of the Ether case that differs from Ripple XRP, because otherwise, that's a decided case. It would go into the case law area, and the Ripple defense would cite that as justification for their position. As a precedent.
Yeah, it wasn't originally a case. It was just an announcement, basically. But maybe I think what they're trying to get is I don't know, some kind of discovery on SEC's internal processes on how they came up with that sort of announcement and decision that they seemed to make on Ether.
Yeah, well, my understanding of the Ripple case is that it's pretty clear cut to me, but I don't know all the fact patterns associated with it. I mean, on primary issuance, if the company receives funds from that means they've issued a security, in this case a coin, and they directly took cash from investors into their corporate treasury. That is a security. That's raising equity, and to me, that's they basically did an ICO in the United States, which is illegal.
Right. And a lot of people who weren't around a long time, I know Brad would remember this well, was there used to not be a thing called XRP. The token was called Ripple, and the company was called Ripple, and Ripple was the thing you bought, and it was one thing and only one thing. But because of what Tim just said, I suspect, at least
wasn't it called
what
Ripple?
Tim just said, there was a very
Ripple and RippleNet. Like, wasn't the network called RippleNet?
I think it was just all Ripple. Yeah, it might have been RippleNet, but everybody called it all Ripple. They'd be like, "Oh, I'm buying 2,000 Ripples." It was Ripple. It was Ripple. Everything was Ripple. And then I think my guess is because of what Tim said, there was a very conscious effort, maybe starting 4 years ago or so, where they're like, no. That's a separate thing over here. And everybody was laughing at it when it first came out. It was ridiculous. It was like, oh, come on.
Yeah,
like,
Ripple was
no,
discovered.
Joel doesn't work for us. Joel is
it.
with this thing. It was a big separation thing, and everybody was laughing at it. And then they deleted everything. I mean, the whole website, everything was all changed because it was all referenced Ripple. And then they just they're like, we're calling it XRP now. Everybody's just laughing at it for a while. It wasn't, so it's important to remember that as part of that. And that's not the kind of thing that I think is going to like fool the SEC. They clearly have those records from those old days. What you could do, from a defensive standpoint, is say, hey, look, we were making continual steps to do exactly what Ethereum there did and become sufficiently decentralized. Because that's, I think, a big, one of the big things they got going for them. I don't want to speculate on this too much. I'm not a lawyer, and it's not my place to do it.
Well, the Ripple case, it's not the cause effect, but that's the reason why airdrops and drips exist, because you cannot issue a coin and take money into the company, period. Not until the securities laws change and we allow ICOs in the United States.
And even an airdrop can be a security. In there's cases where they've somebody's given something away for free, and it could still be a security. So yeah, I think, but
not
I
just
think
a security, but that also falls under the regulations for like the CFTC and stuff, because airdrops, they could be given to people who don't pass AML, KYC, or whatever, and that's a risk. Aren't they considering you like a money service business or something if you airdrop tokens and people start using it as money?
I don't know about that.
Yeah, I'm not qualified to answer that one.
Yeah, I know for sure that an airdrop, there's a couple, I used to have the cases memorized, but I don't, but there's definitely, I'm positive that there's cases that show that like basically an airdrop can be a security. I don't know if it counts as a securities offering. There's two different things. Are you security, and was it an unregistered offering? And I think kind of unregistered offering is considered more, there's more teeth on the general laws around that as far as like how much trouble you're in. And then if you're an unregistered exchange, you're in even more trouble. So nobody's been brought an action as being an unregistered exchange, but I would say that once the SEC, and they can take their time, they're notorious for taking their time. They can just, once they have something that they absolutely, there's no question, no gray area whatsoever that it is definitely a security, and it's still trading, then I think they have a strong case. Interestingly, most of the ones they've gone after are defunct by the time the SEC does the action. So there's not, it's not a big problem that somebody like a Coinbase is listing them. But, these companies are smart. I'm sure that if it's clear that something's definitely a security, any exchange in their right mind would delist it immediately.
Hey, when's the last time something like this has happened in the securities world, where some new vehicle or some new technology or some new regulations or something had to get written to allow a disruptive technology or thing? I guess, is it SPACs or like, I don't really follow this too much.
It's a pretty stagnant industry. It's probably changed more in the last year than in the last 50. Remember these rules: 1933 Act, 1934, and the Investment Advisors Act of 1940 are the main three laws. Especially those first two are the main laws. They govern, like, they're the root of like almost all of what we're talking about now. And these these things are ancient, decades and decades and decades ago. Nobody who was even involved with writing this stuff is alive. The people who wrote these rules had fathers who were Civil War veterans, and the car had just come out in their lifetime. They'd never seen, they'd probably didn't have a phone, never heard of a thing called a computer. And they wrote all these laws that are supposed to be governing, is staking allowed on a DeFi token of whatever. So it's a pretty stagnant thing. There's been some disruptions, like with the way the clearing has worked and other things like that have caused, regulatory and systemic changes, particularly moving stocks to street name, which was basically a capacity problem. They weren't able to scale how you moved certificates and stuff around. So they came up with this long story. But ultimately it ended up being what we call street name now. So nobody really owns their shares in the US. It's all a claim. You have a claim to your broker, and your broker has a claim to clearing firm, and then the clearing firm has a claim to these groups called DTCC, who ultimately has a claim to CD&Co, which is the ultimate real owner of all the stocks, in almost every single publicly traded stock in America. And so there's disruptions like that, but it's just clunky, boring. I love it. I think it's fascinating, but it's not like the crypto level disruptions. So I think it's a big deal. We'll see. Hopefully what's cool is that there's disruptions also, like UK has changed a lot of things. And I think that, and they're really old and stagnant too.
Hey everyone, I will be ending. Oh, sorry. Hey everybody, thank you for joining us for this earnings call and the discussion that came afterwards. If you're interested in learning more about Cafe Bitcoin, you can go to cafebitcoin.club. We've got the full schedule of events there. We do one-off events like this. We have a event on Monday evenings called Beginner Bitcoin Q&A. You can find some of those recordings actually on the Swan Bitcoin YouTube channel. We do all sorts of events. We have lightning events. We're going to be doing an event with Hester Pierce next month as well. we have rooms in all sorts of different languages as well. If English isn't your native language and you want to talk about Bitcoin, so head over to cafebitcoin.club for more information. And I would recommend, if you're looking for something to watch now, head over to watch Bitcoin TV. I dropped a link to this in the YouTube chat, or you can go to the website bitcointv.network. Anyway, thank you all for joining, and we'll catch you next time.